All right. Hello, everybody. Welcome back to another Nvidia earnings stream. We get to do this 4 times a year. This is the Q4 2025 earnings stream. Given Nvidia's weighting in the S&P 500, almost 8% of the index, it is obviously the biggest and most important company on the planet. And it, quite frankly, might dictate the trajectory of the stock market going into the latter half of the year. I'm here with Jose and Tanner, longtime OG Nvidia bulls. They've held onto the stock for a long time. I think they both have some of the best analysis on the planet on the company. How are you guys doing?
I'm doing well, man. I'm doing very well. This is the Super Bowl of earnings calls. Super freaking excited. I have like half my entire net worth tied to this stock. So although, companies that I'm also holding that are reporting today, Nubank, Chime, Salesforce, these sort of things, honestly, those companies can go to zero for all I care. As long as it's putting up good numbers, I'll be green at the end of the day. Fingers crossed, though. I'm not just holding it for this quarter. I'm going to be holding for many more years to come. So it's not a make or break quarter, but obviously I still hope for good results.
Yeah, I mean, same. I honestly forgot we were in earnings season. I thought it's just Nvidia and that's it. I forgot we had other companies that do report earnings today. I'm super bullish, very similar to Tanner. I would love for the stock to see some massive upside today, as it is a hefty position in my overall portfolio. But it's more of that long-term story, right? I'm curious what we're going to hear. I'm pretty sure it's just going to be more evidence to put into that bullish case that probably each of us have for this company. I mean, with GTC up around the corner, I'm pretty sure there's no reason for me to want to let go of this anytime soon.
Yeah, it's going to be really exciting. Thank you all for being here. We have a lot to dive into before we get into the earnings. And, obviously the markets have been in a bit of a flux over the past couple of weeks, in particular technology, which is now trading at its lowest multiple in over 10 years. You got a lot of people questioning the AI trade, if it's real, if it's fake, if the Capex can continue. And I think Nvidia, SaaS, obviously we've seen the Armageddon there. Nvidia will hopefully answer a lot of those questions and kind of maybe steer us into the right trajectory for the market as we exit February, which historically is not the best for the market anyway. I guess we'll get started with this question. Tanner, we'll start with you. I mean, I'll put up the earnings projections right now, but how big of a beat do you think Nvidia needs to have? And do you think they will come through with that beat?
You know what? And we've seen this in the stock over the last few days that we've actually started to see green days. Analysts have been coming out and really upgrading consensus on this company. So it used to be $65 billion expectation, now $66 billion. I saw some analysts come out saying $69 billion could be what we end up seeing this quarter. It's always tough whenever consensus continues to rise right into earnings a few days before. But that being said, what I'm expecting is that they end up beating Nvidia's numbers. As long as we get above that $65 billion mark, I'm a happy camper. If we get anywhere near 69 billion, I don't even want to put it into the possibilities. But if we see 70 billion, I mean, honestly, I'm going to flip my desk. I'll be so excited. But that's not the expectation. I'm not going in hoping for that to be the case. I'm just, prepare for the worst and hope that anything better than that ends up being the case.
Yeah, one thing Tanner mentioned is just a few days ago, if you looked at expectations, they were almost like $1 billion lower. It's crazy how analysts have gotten extremely bullish just in the past few days. It's like, where were you these past 2 months, 3 months prior to earnings? Why do it before? I do think Tanner's going to get ready to flip that desk. So we're going to see that live, people. So stay tuned for that show. But yeah, I think obviously it's going to be more about that guidance number. I think it's now 71, closer to $72 billion of expectation. I think we actually get closer to the mid 70s. But main focus as a long-term investor is, can you beat the numbers you presented? I think the answer is without a doubt here.
Yeah, it's going to hang on guidance, and I do think that we end up seeing mid 70s in revenue. Obviously, I think guidance or earnings are going to stay pretty consistent in terms of their margin. I don't know of anything that is going to impede on margin too much. And then as we get into sort of the next architectures of more Blackwell sales and then eventually into Rubin sales as well, I actually think that this is going to help with overall earnings, let alone the amount that are actually requested, which it's so surprising too. If I could just speak on like what Jose said, analysts are just coming out of the woodwork saying that there's upgrades, as if TSMC's monthly metrics that have been coming out, like we just got this information. No. Okay. We've been seeing this throughout the entire quarter that they've been upgrading, beating expectations. Capex from every single company, not even just the hyperscalers, but the neo clouds as well, all of them pushing into really, really high numbers. A big percentage of those demanding almost exclusively Nvidia chips. So I don't see how they don't do a beat and raise on guidance, but analysts, I guess, are a little late to the party.
Well, Tanner, let me ask you this question. Why do you think this is what Nvidia's stock prices looked like, where the price has gone well below the EPS growth, leading to about a 27 times forward multiple? Why do you think the street hasn't recognized the premium?
I'm for real the worst person to ask. I don't know why other investors make the decisions that they make. I'm only focused on the news that I'm seeing and the fundamental analysis. And from everything I saw, things are looking good, but people have this weird dichotomy of believing that the AI build out is, potentially oversubscribed, that things are not going to happen as fast as they're happening. And then in the next breath, everyone thinks that Anthropic's going to eat all of software. And I don't think that you can have one without the other in terms of AI, the coding agents getting better, and Perplexity and Notion AI and all of these services that are coming out with better and better products each and every day. And then also say that AMD and Nvidia are not going to be beneficiaries of that change. I mean, I can't see that. So I can only focus on me. I have a feeling like I've seen it coming. I'll have to be proven right. I haven't been proven right yet, but historically speaking, I was. So I'm just going to try to keep on doing what I've been doing on Nvidia. Believing in the greatest CEO of all time. That's why I got this jacket on.
Yeah.
Okay.
I think again, Tanner, I personally can't think of a reason why it's not trading at higher valuations. I mean, just on the forward multiple expansion, I think it's what, 27, 28 right now, when it normally trades around 32, 33. Just that alone can increase the stock price itself. I just think the market is scared that $682 billion we saw on 5 players in Capex, can that really continue? The market is going to question that. I think the answer is yes. I mean, we've seen from all these cloud service providers. I mean, even neoclouds, Nvidia's just reported earnings, right? And they did about $6 billion in Capex this past year, and they're jumping to about $20 billion in this upcoming year. I think they mentioned closer to 20 just because of the growth they're seeing in this AI space. If they're doing that, I think we're going to continue to see that build out into 2027. But for some reason, the market is like, oh, cool, you increase Capex for 2026. We're only in month 2, but we need to know what you're going to do in 2027, because that's how crazy we are about this AI space. Is it going to continue? Can you tell us a little bit more about 2028? And unless we give you that, then I think the market is going to continue to be fearful.
I agree. And I think that's actually the entire reason the multiple has been compressed compared to its 5-year historical average of 38. Like, the Capex from the hyperscalers wasn't enough in 2026. The market's trying to figure out, all right, in 2027, 2028, will this keep going? Or genuinely, is it just semiconductors are cyclical? Nvidia's caught up in one of the best cycles we've ever had, but the cycle is going to run its pace pretty soon. Now, I read an article today. This article went a little viral over the past couple hours by Gavin Baker. He is an early Nvidia investor, and he's been in the tech world for a long time. One thing that he said here was really interesting. He said, believing that this time is different is dangerous, but I think this time may be different. The world is fundamentally short both watts and wafers, and it may take years to resolve these shortages. The shortages of watts and wafers may prevent an overbuild. Hyperscalers would overbuild if they could, but they simply cannot. To the best of my knowledge, there are no comparable shortages preventing the deployment of the precedent technologies. Difficult to have a crash without an overbuild, especially from current valuation levels, Meta at 18 times, for example, where technology equities trade at the same multiple as consumer staples, and wafers may be even more important than watts as a bottleneck that leads to smoother for a longer AI cycle. Do you kind of agree with that argument that the multiples are already compressed in the big tech companies? They are taking all their free cash flow and spending it And if they could spend more, they would, but the memory shortage, wafer shortage, there's all these different nuances to why they actually can't have that kind of dark fiber overbuild we had in 2000, which led to Cisco collapsing 80%. Do you think this time it actually could be different?
If I could jump in here first, Tanner, I think in the short term, it's going to look different. I think if we go out into the future, you're going to see this gap that there was a cycle. But one thing I've mentioned numerous times, is I do like that there is a shortage. A shortage creates that prevention. I think I even talked about it earlier this morning with you, Amit, in the channel. We've been talking about this since advanced packaging was an issue just a year, maybe a little bit more than a year ago. It prevents these hyperscalers from buying all the chips that they theoretically can. If there's not supply, the pent-up demand of this year is going to go to next year, and then the pent-up next year of what they needed last year, and then this year is just going to continue to grow. So the cycle will last a little bit longer, a lot longer than most cycles, but I think eventually it will be a cycle. The great thing is, I think we're less than 50% in this cycle, and not so we're still not even halfway done through the cycle. So I'm still for this ride. Even if it is a cycle, it's definitely going to last multiple years from here.
Yeah, I like going back to the question that you said about, how is the market reacting the way that it's reacting? I honestly think people just have zero idea of where artificial intelligence is going. And there's, people are wondering if this is just going to be chatbots or, how real is this agentic stuff? A year ago, people thought AI was just almost an autocomplete. But now I think people are starting to see why Sam Altman and Dario and all of these people are spending trillions of dollars, like going into deep risk, because the tools that we're seeing today and the tools of tomorrow that are coming out are actually like not slightly useful, but extremely useful. So useful that people are starting to wonder if they're going to have jobs in the future.
So useful that people are renting GPUs from 6 years ago still today.
Exactly. And like, I think the tasks into the future are also going to surprise people. As long as we continue to have these breakthroughs, and I don't know, I see no reason why there's not going to be continuous advancements of AI agents, and then hopefully physical AI coming next, which are going to be step changes larger than the last big movement. Not to say that generative artificial intelligence is done. There's still expansion in the TAM there as well, but now we're starting to see multiples of these legs taking steps up. That's going to require a massive build out, and we're not there. The whole idea that this is going to get done on chips that are on your iPhone or something like this, like you're not going to be able to run essentially potentially thousands of agents that are working around the clock on some chip on your iPhone. You're really noticing that like people are buying Mac Minis, but they're going to end up realizing that a real way to stay more cost effective and keep the total cost of ownership down is going to the rack scale eventually. As their needs end up, seeing that type of demand, you eventually need Nvidia and you need the rack scale, and you're not going to spend $15,000 on a Mac Studio every single time that you want to essentially expand your one-man business.
That is kind of crazy that Mac Mini demand is so high because of OpenClaw, which once again, that demand goes right back to Nvidia.
But that they're just wanting a small version of what Nvidia sells. Like they're just realizing what the bigger companies need. Like, you're seeing individual creators that are like, oh, I need to start building out, and their Capex is exploding. They're just doing it in the form of Apple. Like you're seeing what every company has seen for the last multiple years.
That's a fair point. Let's listen to Stacy from Bernstein, one of the biggest analysts on Nvidia, and then we'll react to his take.
It's like massive demand. I think the worry is you look at where Nvidia is trading versus like some of the other names in memory or semi-cap or whatever. There's a pretty big divergence there. People do seem to be worried that we're approaching, call it like a local peak in spending, given the magnitude of the hyperscale, the dollars and everything that are getting spent this year. And I think what people need to believe is that we are not at a local peak, and that this can continue, not just in 26, but in 27 and beyond. And so anything that Jensen can give us sort of on that forward view and that forward roadmap and trajectory would be helpful. I think the other thing that people want to get comfortable with is gross margins, because component costs and everything are rising. And The company has already said that they think they can hold gross margins in that sort of mid-70s range this year. And, people are going to want to get, like I said, some sort of comfort that that can still be a sustainable thing as we go forward. And, we'll see what they have to say. But like I said, the general dynamics of the industry and the demand environment all seem to be going in their favor right now. Again, I'd expect the numbers, the headline numbers and everything to be very, very strong.
But that suggests, I guess, when you talk about gross margins, because I feel like that's an undertold and under-discussed part of this story. All you need to do is look at Micron shares, for example, and you realize how much these companies are paying for memory. As to whether Nvidia, I suppose, could continue to raise prices for their best and brightest chips to offset the increased prices that they're paying for memory. Are you worried that that's going to wane at some point?
Yeah. Well, I think the holding margins this year is a combination of two things. One is procurement. So they were out in front of this like much before anybody else. I mean, he was in Korea, eating chicken and drinking beer with, the chairman of Hynix, like not that long ago. There was a reason for that. So they've secured, memory earlier before others. So I'm not really worried about them getting that supply. That's good. But on the pricing front, you're absolutely right. They need to take prices up because their costs are going up. So it's imperative on them to make sure that they're improving performance much more than they're taking up price. That's actually their ceiling in my mind. It's not.
The memory conversation is actually relatively interesting. The Micron, SanDisk, SK Hynix, Samsung of the world have all had their stock prices absolutely explode. In fact, Morgan Stanley put out a report this morning. They think by 2027, Samsung will be the most profitable company on the planet ahead of Google. Yet their market cap is 1/5 of those companies. Tanner, do you think memory is going to come up on the call? And do you think it is an issue at all for Nvidia in any respect?
I mean, it's definitely going to come up on the call. I think it's going to be a big topic that the analysts will want to have a lot of questions for if it's not immediately addressed by Jensen. In terms of how it lasts over time or any of those sort of comments, I defer to people like Jose, and I'm just a copy and paster of his comments. So, I'd like to hear from him.
I mean, that definitely going to be talked about. I mean, we know HBM is the most expensive portion of these AI chips, which is crazy, right? It's not TSMC, it's nothing. A biggest portion of the bill of materials for NVIDIA AI chips are HBM. So right now, as the memory market continues to be extremely constrained, we hear all these talks about great margins on their end. I guess the question is like, how much is that going to impact NVIDIA's gross margins? Are you going to have to eat up some of the cost? Are you going to pass it off to your customers? In forms of actual shortage for them, like I think whoever was speaking mentioned that they've been doing this for a while. So procurement, they have it. Obviously, it's not enough. They wish they can have more, but they have enough to continue to grow, continue to see that revenue step up each sequential quarter. So it creates a ceiling, but it doesn't create a ceiling where next quarter I don't expect it to grow sequential basis or the quarter after that. It's just the ceiling that prevents that growth from going to some insane levels.
I put the pump or dump poll in the chat for NVIDIA so people can answer what they think will happen. Tanner, I asked this question to Jose in the morning. I'll ask you and asking the chat as well. How do you think the stock takes a 10% dump? What do you think would have to happen?
Guidance. Any form of a large hit to guidance, I think, could be concerning. Yeah, and that doesn't even have to be that they don't want NVIDIA chips. That could be an energy concern. That could be a memory concern. There could be something that could end up slowing NVIDIA chip sales down. I think that could have a severe, like NVIDIA's multiple is designed based on the future, not today. So maybe that's not the most exact answer, but honestly, I'm not really thinking too hard about it.
You're just staying optimistic, which is good.
It's not optimistic. I just like I'm looking at. I'm not just looking at what Jensen's saying. I'm looking at what all of these companies are saying, and which are the ones that are saying, "Hey, you know what? We need to slow down." I don't see it.
No, it is a fair point. Look, I think, could there be a world where the stock dumps? Obviously, that could happen. I think that would have to do more with market makers and the convexity in the options chain, which I think is, the stock's already up from 186 186 last week. I think it was at 181 at one point last week to freaking 197. So that is a pretty big move. It's happened. Maybe that was the earnings move, and that is implied in, even though the implied move is 5% now. And then if they dump it, it dumps back to 187 where it was last Friday. Or the numbers are so unbelievable, you get the blowout above 200. Now, 200 psychologically is very important because you see a two handle. Number two, the other reason that 200 is important is because that was the last all-time high, 212 in particular. If you can break above 212 today, it means something in the numbers told the algos we have to buy. I don't know if we'll hold 212 for the rest of the week, but if we can break above it, I think that would be exceptional. And, if we actually get a breakdown back to 180, 175, something would have gone wrong. If we get a breakdown to 190, it's like, okay, whatever. We were there a couple days ago.
Yeah. The amount of times that like this company has gone up and down, like we were talking on the phone whenever it was passing like 212. If you remember that, after
we were there together watching that.
Yeah. I think that was GTC, right?
In October. Yep.
And then after that, reports ended up coming out, and then Nvidia ends up dropping back down into the 170s as people believe that like they're going to fully get replaced. And, he's fighting with Sam Altman or something like this, as if Sam Altman gets to decide who's the king here in this relationship. It's cute. But they quickly turned that back around. And I think we will test the $200 mark after earnings. I'm not necessarily calling for all-time highs, but eventually if you continue to grow and have higher earnings per share and they're buying back shares and like stocks go up in this type of environment where you're earning more and growth rates continue higher, stocks go up, at least on a market cap base, but they're not dilutive. So yeah.
Triple V, thank you for the super chat. For those that don't know, he's a good friend of the channel. He also does have a pretty sizable Nvidia position. So he'll be watching with some enthusiasm today. And hopefully his super chat, $199.99, is maybe where the stock price gets to. Even though we're pretty damn close to it, dude. We made a nice little run today, $196.75. Put in the chat, what's your price target? Where do you think this one can... Oh, Tanner, we got to make you do this. So Jose and I closed our eyes this morning, and we just imagined what the price would look like. I said 211.78. Jose, what'd you say? 213?
Yeah, 213.58. It was the number that popped up.
All right, Tanner, close your eyes.
So, but what is the moment? Tomorrow morning? What it opens at? What are you talking?
No, 8 p.m. tonight. Where does it close at 8 p.m. tonight?
Close your eyes.
You gotta close your eyes, dude. You gotta close it.
Close your eyes. No thinking, just close your eyes. Whatever comes out first.
Just let it naturally.
Okay.
Like 134.
209.56 is what came to mind.
Why does that sound so like realistic? It sounds better than Jose's. 209.56. All right.
That's what came. That's what you guys told me. Magic number.
I feel like you might be right on it.
No, I'm just kidding. The first number that came to mind was 400 because that's where I see it going. I'm looking into the future, baby.
Tanner and I, when we were at CES, we were having a little debate on this. You think conservatively, 250 this year is not crazy.
It's happening.
Okay, so now you guys know how Tanner feels. I am still struggling with it just because, but the more I hear about the Capex spend, the more I see what Anthropic's doing. I'm also like, okay, 250. If you assume $9 of EPS in a couple years, it is not that crazy to get to 250. But
I think people are just getting like I saw Parsival. This is who I'm getting this idea from because he did say it in chat, but I completely agree. People are just honestly blown away by the large numbers that we're seeing.
Yeah,
like. How can you possibly see them getting to $200 billion a quarter in revenue? No company does this, and the numbers are just getting too big. It's just breaking people's brains. They're not seeing Google Cloud growing at 50+% for full year of 2026. Backlog is exploding. Capex for all of these companies is surpassing $600 billion. And in fact, go look at the analyst expectations for Capex. They're slightly bringing it down now. It's no longer at 600 billion. For the big four. Who is like, is this all Jay Goldberg? He's getting into people's brains and he's bringing ideas of Capex coming down. Who's getting these ideas that Capex is coming down?
Jay Goldberg, for those that don't know, is the only $100 price target on the street for Nvidia.
Yeah.
Yeah, I agree. I think the reason people think Capex can come down is because they're afraid that if free cash flow goes negative, which it is for some of these hyperscalers, Amazon in particular, and then the stock prices take a hit, management is going to be like, we got to do something about this. We got to reduce our capex. All the management teams have pretty much, especially Zucks, have given the impression that says, we don't care if our stock goes down. This is the opportunity of a lifetime. We have to spend for it.
I think they have to, because if they slow down, the other ones are going to take their share, right? I mean, you had Microsoft that only grew Azure, 39%, because they only had limited GPUs and they had to give some to their first party. Imagine if they stopped doing any capex. Google and Amazon would gladly take that lunch, would gladly. So I like the CEOs that unfortunately at the moment say, you think it sucks that we're doing capex? Well, I mean, sell your shares. We're going to keep going. And I think they have to, because if not, in the long term, it's harder to gain customers once you lose market share. And if you don't invest in here, you're going to lose those customers and then you're going to be screwed.
Yeah. I think it's a make it or break it moment for them. They see this is not a small technology. They're not like, oh, we're going from DVD to Blu-ray. We're going from no automation or like Zapier level automation to everyone and their mother will be able to make their own applications. And like, you need to have a serious hold in this next almost technological, I don't even know how to call it, like dynamic going forward. They're like, we're going to have a shift here. If people don't believe that, they haven't even remotely tested what's new in these products. And I don't mean like, oh, you haven't opened up ChatGPT or something like this. I'm talking about the latest tools of Claude and Base 44 and Lovable or any of these things. In the last 2 months, they've made seismic changes. Like, you have people like Brian Armstrong and Toby Lutke and all of these guys saying like they're back to coding. Like, it's imperative that the CEOs are back to coding. It's hilarious. So I don't mean like we're going to start hitting some. I'm not making an unbelievable call for GPU growth or something like this, but if there's even a possibility where a percentage of human capital ends up going to more silicon capital, the visionaries like Mark Zuckerberg are going to pay fortunes to make sure that they are potentially on top of this new innovation. Hundreds and hundreds of billions of dollars, which people laughed at whenever Mark Zuckerberg was sitting with Trump and he said 600 billion. And then he had to come out the next day and say, oh, by the way, it's probably going to be closer to 800 billion. Like he said, like the comments of meta compute and all this stuff, like the hundreds of gigawatts and everything, is just to set they're not slowing down. There's no Brad Gerstner comment to come out and try to be an activist here. The companies or shareholders like Mark Zuckerberg are going to use their founder shares to make sure that they get the vote in where this company is going forward. They're very confident.
All right. 2 minutes. 75% of you said pump. 25% said dump. Jose, I'll give you the final question. Pump or dump?
Pump. I'm going with pump here.
Tanner, I imagine you think pump.
Yeah, especially as we're going down into the close, it makes me more confident that we get a pump.
Are we? We're going down? Yeah.
I mean, after Tanner's speech, how could it be anything else? I got chills. Vote for Tanner for Nvidia representative or something. This guy I already own so much Nvidia, and I'm like, do I own enough?
Dude, for real, honestly, I like all the new money that I'm getting is like going into Nebius and I want to get CoreWeave, and I'm looking at AMD because I'm just fully sold. I think that there's times where there are seismic changes. This is like Henry Ford just invented the factory lines. We're getting silicon factory lines now. Go use Base 44. It'll change your whole life.
All right, we're going to have about 5 minutes until we get the NVIDIA quarter. So we have Synopsys, Zoom, Joby, Trade Desk, Snowflake, Nubank, and Salesforce. Those will also be very important names. I think NVIDIA will get at 4:05, so we'll try to get all of those earnings as soon as possible. But at 4:05, we should get NVIDIA numbers, and then we'll spend the next 45 minutes analyzing it, and then we will have the call at 5 p.m. Eastern. All right. Thank you, everybody, for being here all across the world. Your friends and family probably don't know the most important company on the planet is about to report numbers, but we all do. We are here. Wednesday, February 25th, NVIDIA Q4 earnings. The stock market is now closed. And now we wait. And now we wait. Nvidia closed at 195.63. Actually, they might be at 420. You're right. So we might have to wait about 20 minutes. Right, Jose? It's usually 420.
Yeah, 420.
Okay, cool. So we'll have 20 minutes to get some of these numbers, but we'll get the rest pretty soon. S&P 693 got back into the 690s, which is very nice. Robinhood, great day. That was up 5%, 77.53. Palantir 134. That was up 4%. Iren slightly down on the day. CoreWeave actually went down. The data center names sold off towards the end of the day, except Nebius. Nebius held up, but still sold off from the highs. AMD was also red on the day. Meta was up 2.2%. Netflix potentially getting out of that deal. That's up 6%. Amcor up 5%. IGV, nice little bounce right there. That's up 3%. AppLovin was up 7%. You had a little bit of a rebound in software. Salesforce, which is making a move after hours, or it's about to. Salesforce is green. Let's get into those earnings. It was recovering during the day. Did get a spike to 3%, now 2.4. This is an important one. We kind of need them to prove that software is not dead, and good earnings would be a healthy cure to get the market to think it's not dead. So we'll see if we can get those numbers up. Salesforce, wow, 25% beat on EPS, folks. 381 versus 305 expected. For a company of their size, that's not an easy thing to do. 11.2 billion versus 11.1. They beat on revenue. Revenue's up 12% year over year. EPS is up 37% year over year. Trade Desk is down.
Trade Desk, dude. On Zeta's call, Zeta specifically called out the Trade Desk, saying that they are beating them in many RFPs.
Wow, I didn't know that. Oh, there you go. Well, yeah, Trade Desk has had a couple of issues for the past year. But Salesforce, I mean, the stock's not reacting to, are we going red? Salesforce, slightly red now. I don't know what Benioff's going to have to do to convince the street. That's a 25% beat, dude. That is not a small amount. Nubank, that's down 2%. Joby's flat. Nvidia, again, we got 20 minutes. Synopsys, that's flat. Trade Desk, they beat by 2% on EPS, beat by 1% on revenue. 59 cents versus 58 cents expected. Revenue 846 versus 840. Market doesn't care. Trade Desk down another 9%.
One thing I saw with Salesforce, they did announce a 50 billion share repurchase program, replacing anything they had previously. So, I mean, there's some excitement at least from their end.
Yeah, I think you're going to see that across a lot of these software names as well.
Well, yeah, I mean, if they don't buy back their stock at these levels, right?
Mm-hmm.
EPS, again, they're guiding for 179 next quarter, 11.08 billion of revenue. Fiscal year, they're guiding to 46 billion. I think that's ahead of expectations. And I think analysts were just under that. And then they raised the dividend, and they're buying back 50 billion of stock.
Like, what a... The Trade Desk actually went from $141 down to 22 in a year. Like, that is crazy.
That is pretty crazy. It goes to show sometimes if a company doesn't have a moat and the market thought it did, it's over.
They definitely thought they did.
Does Pure Storage have earnings today, guys? Let me know in the chat. If they do, I'll put them on the list.
Do you have Chime on the list?
Oh, Chime has earnings? I didn't.
CHYM, Nubank as well.
Nubank's up there. PTSG, I'll put that on the list.
Redwire, Trip.com, Innovix, C3AI, Synopsys, Snowflake.
Oh, yeah, we do have Snowflake today.
Yeah.
Okay, Redwire is down 2. Pure Storage is flat.
Do you have Joby up there as well?
I have Joby up there, yep. Nvidia, again, flat. Nubank down 2. Salesforce down 4 now. Market's not liking Salesforce. Nutanix, they also had earnings. They beat by 27%. This is another software company. 56 cents versus 44 cents expected. Nutanix, wow, 30% move right there. This is a $10 billion company. Revenue's up 10% year over year. They beat EPS by 30%. They get a 30% move. Snowflake beats, or Salesforce beats it by 25%. They get a 4%.
Oh, dude,
downside.
Sezzle up 17%.
Okay, this is a fintech, right?
Yeah, buy now, pay later. Warren was up a ton today as well, I think.
IONQ is up 6%. I don't have their numbers yet. They also have earnings today. We'll see that in a second. Nubank, they beat on revenue by 7%. I don't have the EPS number yet. but 4.8 versus 4.5 billion. AMD, oh, this is why Nutanix is up. AMD to buy 150 million of Nutanix stock. Wow. That's why the stock is up. Now it's up 20. It was up 30. Why the hell is AMD buying their stock? AMD's been doing a lot of deals recently.
Snowflake up 6.
Snowflake, okay, that's good. Snowflake, that's up 5%. Let's see if we can get some more of these numbers. Let's pull up Salesforce right here, get some coverage on that, and then we'll keep going from there.
Trade or oscillate between gains and losses here. Currently down about 2% in overtime as we dig through this release, guys. Current remaining performance obligations at 35.1 billion versus the estimate of 34.5 billion. That suggests the backlog is growing. It came in higher than its estimates. Non-GAAP operating margins beat at 34.2%, and the first quarter guidance is much higher than expected. Full year guidance for 2027 revenue is in line with estimates. We have comments here from CEO Mark Benioff saying we've rebuilt Salesforce to become the operating system for the agentic enterprise, bringing humans and agents together on one trusted platform. And the more intelligence moves to where work happens, the more valuable Salesforce becomes. Specific metrics tied to Agentforce. We're looking at annual recurring revenue up 170% year over year. It's also announcing a $50 billion share buyback.
Stock still down.
Bro, C3 AI.
Is it good or bad?
No. Bad.
Snowflake up 6. C3 AI. Oh my gosh.
Down 25%, bro. Oh my.
For those that are OG Palantir, you know how many debates we had to have about this stock versus Palantir 3 years ago. Well, looks
Who
like
won?
it out. I think
Who won?
I think Palantir ended up winning that one. I think so. Snowflake crushed 19% beat. And again, whether you own these software stocks or not, we need them to beat. So this stupid SaaS narrative goes away. 32 cents versus 27 cents, 1.28 versus 1.25 billion. Revenue's up 30% year over year. EPS is up 7% year over year. By the way, their guide is 5.6 billion. Street thought it would be 5.54, actually 5.66. So a decent beat on the guide. And you're seeing Snowflake get some love.
Pure Storage is also up about 7% right now.
Okay, we'll get those numbers. Nutanix again. I don't know why AMD is buying stock, but that's up 18%. Sezzle's up 17%. Chime is up 5%. Tanner, if you get anything from that, let me know. Trade Desk down 12%. Snowflake up 6%. Nubank down 1%. Salesforce still down 3%.
I'm going through Chime's numbers right now. They look good.
Okay.
First quarter revenue expected to grow at about 22% for Q1 2026. Adjusted EBITDA to have margins between 14 and 15%. This is a growing company where they're just starting to break profitability. But they're expecting decent margins and revenue growth through all of 2026, above 20+% growth.
Joby, 33% beat, negative 14 versus negative 21. Revenue, they beat by 80%. Revenue's up a lot year over year. EPS is up 60% year over year. Tanner, I think you like Joby, right?
No.
You hate Joby.
I don't know anything about Joby. I gave it away as a Christmas gift. But I don't know the first thing. I know that the CEO's name is Jobin.
Okay, well, that stock up 3% after. They did take a big hit last week because they diluted. They had a partnership with Uber this morning in Dubai. But that stock, double beat. We're seeing a lot of double beats. We're not seeing crazy misses. Chime up 10% now.
Synopsys up about 2%.
Synopsys is C3 AI down 20%. IONQ, by the way, for all my quantum folks, looks like it was pretty good. IONQ, they beat by 511% on EPS. I don't know if that's some accounting shenanigans there, but Street thought they would lose 47 cents. They got 193. Revenue, they beat by 53%. Revenue's up 4x. EPS is up 3x. That's why IONQ is catching the bid after hours. That's up 8% now for IONQ.
Okay, so none of my names were severe losers this quarter.
That's a
well,
win.
I mean, we haven't seen Nvidia yet, so cross the fingers. But so far, Chime, Salesforce, Nubank. I still haven't fully gotten the numbers on Nubank just yet, but hopefully I'll get that report here in a second.
Synopsys double beat again, 6% on EPS, 1% on revenue. That's why that stock is up. Teladoc, going back to 2021, that had earnings today. They beat by 22% on EPS, beat by 1% on revenue. TDoc is down 5%. But they do have a double beat. And then Pure Storage, which is also part of this broader AI story. That stock with another double beat. Again, really nice to see these double beats. 8%, 69 cents versus 64 cents expected. 3% on revenue, 1.05 versus 1.03. And that stock is also up 5% after hours. Okay, so I mean, relatively strong earnings. C3 AI got hit pretty bad. Trade Desk got hit pretty bad. Everything else, Salesforce, I don't know why that's down too. There's got to be something else, but it's not a bad quarter.
I need to go through Trade Desk numbers. This must be a meltdown. This name was a part of my stock draft, and I was holding it at the time, but I had quickly turned around. So essentially the story was that they put out that initial quarter that had put out guidance that was worse than expected. The stock ended up going from like 141 down to $60, and then that's when I really got interested. Then they ended up putting up a good quarter, and I felt vindicated, and then they just started slipping. So by the time they put out 2 quarters in a row that were misses, we knew that this story had fallen apart. And they face large pressures from major names like Google and even Amazon now, with Amazon being so confident at beating the Trade Desk that they were in fact paying for companies to compare campaigns side by side with the Trade Desk just to show off how much more powerful their what was it called? 360. I'm forgetting the name. Someone will say it in chat, but is it DV360? Someone correct me, please.
Here's the update on Snowflake.
For 1.26 billion. Product revenue beat at 1.23 billion. The estimate was 1.2, and its backlog is growing. Remaining performance obligations up 42% year over year. What the street was also looking for was guidance for product revenue in the first quarter. That came in line with estimates. And I was also point out that new customer acquisitions continue to grow as well. 740 net new customers this quarter. Snowflake also points out that it's expanding its AI data cloud ecosystem through partnerships with Anthropic, Google Cloud, OpenAI. That's been a key concern as well. What's the duration of these contracts with the likes of OpenAI that use Snowflake's technology to aggregate data and store it in the cloud? We'll look for more comments from the CEO as the call begins soon.
All right, Seema, thanks. Seema Modi.
Sam, what's up? How are you?
Doing good. Just waiting. I wonder how these stocks form. I've been busy all morning. I haven't had a chance to check out some of the earnings right now, so I got to take a look.
I mean, earnings are pretty good. Again, guys, we have about 7 minutes for Nvidia. So far, we're seeing relatively strong numbers across the board outside of a few names. But even the names that are down a lot, they did have a double beat. Snowflake now going red. Unfortunately, these software names, man, they cannot catch a break as this one turns slightly red. Trade Desk still down 13. Joby's up 2. Nubank now going green. That's up 1%. We also had Urban Outfitters going back to the consumer. Their stock is up 2.5. Record Q4 sales of 1.8 billion. 6.7 billion for the year, net income of 96 million. They bought back 3 million shares and 460 million of profits. I mean, if people are still shopping, then maybe a recession is not as likely. Urban Outfitters up 2.5 after hours. Chime revenues up 31%. Yep, we talked about that. That stock once again making a move after hours. Chime actually going the opposite of a lot of the other fintechs, even though they did get a bit of a recovery today. Coinbase as well was up a nice, 13%. I didn't even see that. Coinbase made a nice move. And Robinhood at 77. BTC, before we get Nvidia, is at 6. Whoa. When did it hit 69?
Oh, it was a good day for crypto and Ethereum. BMNR is up a lot.
Yeah. 69,000 right there.
Trade Desk is not stopped falling, down like almost 17% now. I wish you would look at the at like a closer, like a 1 minute candle or something. It always drives me nuts.
Well, it's not stopping at all. at all. What do you think they could have said, Tanner? Do you think they said advertising is having an industry problem?
I don't think they said anything at the 4-minute or 15-minute mark since it reported, but some investor had just got the news.
Missed on guidance. I'm looking at. Street wanted 699. They came in at 678. All right, it's a $20 million beat, but adjusted EBITDA. Street wanted 225. They came in at 195. I think that's the bigger issue. That means their margins must be compressing potentially. Circle was up 30%. Yep, that had a good day. Sam, I'll ask you the question right here. I know you don't own Nvidia, but what do you think? Sentiment, pump or dump? How are you feeling about it?
It's very likely that considering the S&P trades more expensive than Nvidia on a forward earnings basis, and because we've been consolidating for 6 months, it's going to have a big move. I feel like it's going to break out upside or downside, but just seeing the follow through in the market the last couple of days, it could just pop to the upside. I don't have direct exposure to Nvidia, but I do have a lot of semiconductors in my portfolio that would be impacted by Nvidia if things like really slow down. So, I think it's gonna go up, in my opinion.
Yeah, I mean that's the other thing. Even if you don't own Nvidia, everyone is affected by it.
Yeah, there's no Nvidia is going to go down like 5%, and like the market isn't down tomorrow. Very unlikely, unless defensives, they might move up from that. But besides that, there's just no way Nvidia is going to go down and the market is not down tomorrow. Very unlikely.
We get Nvidia's earnings, by the way, for people that are just coming in at 4:20. So in 3 minutes from now, that's when we're expected to see their numbers. That's why we're talking about everything else right now.
Does anyone have any? I don't know. Do you have any like butterflies in your stomach? Because it's just before Palantir, before Nvidia, before Hood. Like companies you follow closely. I feel like it's normal to be a little nervous. Forget like the economic implication of your portfolio. Just like. Right before the numbers come out. No one else feels that tingle? Yeah. Okay, that's just me. All right.
I just want to get this over with. Like, I feel like
we're adult. We don't care that much.
Yeah, I just want to get this over with. Because the market's obviously waiting to make a decision for this earnings. Like, just get it over with, do what you got to do, and let's make a move, and then that's it, right?
Well, the only reason I don't feel much right now is just I think a lot of it is going to be pre-teasing for GTC, just teasing for GTC. So I feel like that's where I'm going to have like maybe some of the feels of AI is going to continue to change this and that and this. But here we're just going to hear numbers. We're going to hear Jensen just talk about how great things are. But the actual cool stuff, I think we're going to get more at GTC instead.
Yeah. Are you just thinking, actually, maybe I should ask Amit, what's the next chip that Nvidia's putting out? How do you say that again?
Vera Rubin?
No, the next one.
Feynman, some shit like that. Like
yeah, that's close enough. Yeah. So Jose, is that what you think is announced at GTC? Is the Vera Feynman?
I think we're gonna hear it. I think it's gonna be more of some of the chips that are gonna come here with the Vera Rubin. I was looking at kind of the GTC sessions, and you're gonna have they have some stuff with the LPU. They recently just had like that Grok thingy. So maybe we might get a chip with the LPU and GPUs. And then we're also going to, I think we could hear a little bit more of a chip they talked about a few months ago called like the CPX. So I think yes, but I still, the Vera Rubin Ultra is still a crazy thing. We still haven't even heard much about the Vera Rubin Ultra, but the Vera Rubin Ultra is going to be, that's where we're kind of seeing like that 800 volt DC stuff happening in the data center space. I would love to hear so much more about the Vera Rubin Ultra because that's still 12 months away from here. So I think Vera Rubin Ultra is going to be the most the more important one for GTC.
All right, 30 seconds.
Okay,
here we go. 30 seconds. It is time to see what these numbers are. I'll be looking at the stock. These guys will try to get the numbers. If I get it before them, I'll say it. But if any of you guys have it, you can say it out loud. And here we go, folks. This is why we do this. It's why we invest. These are the days. These are the big days. Market's going to make a decision pretty soon, either up or down.
It's going to make multiple decisions.
It's going to make like 1 trillion decisions altogether. But we will see this thing make a move. There's a 5% implied move. Maybe it's flat. But there's a 5% move up or down that the market is pricing in right here. Here we go. All right, results are out. We're going to get it real quick. and let's see if this stock reacts positive or negative to the numbers. Little bit of a red candle right there trying to form. See if there's anything towards it.
Waiting on bated breath.
Watch it do nothing for the next. Okay, now we went green. Still don't have the numbers yet. She's trying. She's really trying right there.
Oh, dude, these green candles are teasing me.
They're absolutely. Last time we had a little bit of a spike near the call, not in the initial release. So maybe.
Yeah, Jensen can move markets.
5 trillion.
All right, we're still getting really nothing. I don't have the numbers either. Maybe the numbers aren't fully across the wires yet, so you're not seeing much.
I don't see them either.
Okay, here we go. This is going to be when we see it. Again, Street wants 66 billion and about $1.45 of EPS. It's actually, usually it's out by now to me. Usually right at 420.
Yeah.
It's there. Yeah, I don't have the numbers. I mean, that's probably why.
Same, yeah.
Delayed report. Not a good sign.
Oh my goodness. They'll release it when they release it.
And that's what Jensen is telling you right now. I'll do it when I want to.
Yeah, Jensen's like, hold on. Did you forget who I am?
The world has to wait
Wow.
for Nvidia, not the other way around.
Dude, every time we've covered earnings, we've not even had to wait 2 minutes after 420. Usually it's right there. You're seeing the stock has no idea what to do. It's just stuck.
They're still adding all those zeros to the revenue. It's just that many.
There's like one guy, Bloomberg, who just saw 80 billion, and he's like, I don't know if I should publish this yet. If I do.
No, if we see a 70 handle, I'm going to be happy. That I don't need to see. We don't need to start talking about 80s.
That would be a $5 to $6 billion beat, guys. If we see a 7 in front of that revenue number.
And hoping for 75 billion as the next quarter guidance. That would be extremely exciting. 73 plus or minus 2% is probably what they're going to do, something like that.
Dude, the stock is so stuck. It has no idea. It has nothing to go off of. I see numbers in the chat, but I need to confirm it.
I don't see any numbers.
Nothing that I have confirmed.
I haven't gotten anything.
I don't got
Michael Burry is going to use this as his next bearish thesis.
Yeah.
Well, we're all across the world together just to see what these numbers are. There's something beautiful about that, even though we're delayed. But there is something beautiful about that.
Ooh.
Real blonde broker had it out.
I don't trust anything other than my specific.
No, usually it's right on the website.
Yeah.
Like they're pretty quick to update it.
Yeah, guys, if you're quoting random people on X, you gotta wait.
Yeah, I don't know if this is true or not.
Are they waiting for me to put the leather jacket back on? Here, give me 1 second.
Yeah, dude, you can't take it off. What are you doing?
It's gonna get released now that he walked away.
It was getting hot.
I like he has to hide his camera when he puts on.
I
his
see a
jacket
red
as if, like,
candle,
he's
Tanner.
not
You're taking
wearing
that
pants.
off.
Yeah. Are you not wearing pants? Is that why you didn't hide? You hid the camera when you got?
No,
up?
I just bent down and grabbed the thing. I don't know. I don't. Leave me alone, Sam.
You're not wearing pants.
I turned the camera off for everything. I blow my nose or something like that. Leave me alone.
This is crazy, bro. They've never been this late.
Yeah.
And we're all
Maybe
here.
they changed the time.
We will all remember on Q4 when we were staring at a green candle that could barely move up or down, waiting for these numbers.
Maybe they decided going forward, they want to have their own time to post 4:30.
No, but they never do 4:30. Why would they change it this time?
I don't know, bro. I put on the leather jacket. They can go ahead and post now.
Guys, it's never 4:30. It's always 4:20. Apple's the one that does 4:30.
Dude, everyone is waiting. Like
I can't even switch to something else because it might come out any second. Like, I can't even...
Well, we're starting to see some real candles here. So
Yeah,
Okay,
that's something. That's something.
once I see
I
it,
don't think it's anything.
It's going back.
Intern is fired.
down 30 cents. Yep, that's something. We missed that, bro.
Yeah.
Yeah, it's not doing anything. It moves like 20 basis points.
Dude, we are some nerds just staring at these numbers.
The whole
But
world
hopefully
is nerds right now.
Hopefully we're richer nerds at the end of this.
Well, you keep an eye on Nvidia. Sezzle is now up 19%. C3AI is down 19%. Trade Desk is down 15%. Joby is up 4%. Nubank is up 3%. IonQ is up 5.5%.
Newton is up 18%. Jose,
That was an
might know
AMD
one.
partnership, I think, or acquisition.
I still have no idea why they're
Oh.
buying it, but they said it's a strategic partnership.
I'm surprised that, yeah,
Guys, but these numbers you're putting in the chat, you don't have a source for it. You can't just
yeah, I don't
say
I don't
some
trust
account
those
on
numbers.
X knows it.
If it was Bloomberg, this candle would be moving.
Dude,
Well, if it
even
was
if you get
Bloomberg, we would just see
67
more
billion.
people. We would also see more people tweeting about it if it's Bloomberg, or at
That is
least
true.
get more wires out.
Yeah,
across
there's some
the
pretty
media.
trusted sources online that get the numbers very quickly, and they're not posting anything right now. So
Yeah, I'm seeing some of these accounts posted. There's no way they have these numbers unless. I mean, if they're posting it and Bloomberg's not posting it, then how the hell did they get the numbers? That's a more interesting question to me. All right, maybe it's 4:30. Maybe we got 3 minutes. Maybe it's 4:30.
Yeah,
We'll
they
get
make us
GTA
work.
6 before Nvidia. Oh my gosh. 196.40, slightly up after hours. The number I'm seeing the most is 67.4, but again, we got to see the actual results.
we have to do the State of the Union. If they do a triple B, we all have to stand up and clap and then sit back down.
Dude, I'm down. I am so down. All right, while we're waiting, put in the chat where you're watching from. Put in the chat. What country are you watching from?
Then you guys are really going to see which one of the four of us has their pants on. All right. I didn't see anything, Jose. That didn't prove anything.
Okay, we have India, Canada, Sweden. You could also put what state if you're in the US, or what state in general if you're watching from somewhere else. San Francisco. Chris, you're not in Mumbai right now. Toronto, Florida, Dallas, Arizona, Wisconsin, Columbia, Delhi. All right, all of us are waiting for the exact same thing.
Someone I know is watching from Nvidia headquarters. Can you just let them know that things are late?
Oh,
Yeah.
there's definitely some Nvidia employees watch. They're trying to figure out the same thing we're trying to figure out.
Come on.
All right, we got 1 minute. Let's see if it's 4:30. Let's see if it's 4:30.
But I'm also not seeing any reports of like a delayed report here.
But I never hear it at 4:30. It's right. We're right. I think it's always 4:20.
It is 4:20. I've got a thing that says it's supposed to come out at 4:20. It
Always
says right here.
4:20. Yeah.
I'm surprised there's not a prediction market on this. When are earnings going to be released?
All
It
right.
was 4:20 the last 4 quarters every time.
4:30. Here we go. If it's not 4:30, then I guess we're still waiting.
And here we go. Still nothing. All right.
6 seconds. Oh,
Okay, officially 4:30. Algos are
Sleeping.
they're not doing anything.
Dude, this is actually crazy.
Dude, what are we doing here? Is the earnings call still at 5? Like, are we?
I mean, this one's kind of important for like the global economy, to be honest. Not even the stock market, just like kind of need to know.
Is this how you run your show, Jensen? This is how your customers feel?
Dude, Nvidia never is late. This is actually kind of weird. Guys, the earnings is never at 5 p.m. The call's at 5 p.m. The earnings is always 40 minutes before.
That'd be crazy if they just decide not to release it.
I mean, they are the most important company in the world. Maybe they would do whatever they want. They could, you know.
They seriously could.
You think this is going to be a question during the Q&A session now? So why were your
if
earnings?
If it takes another 10 minutes, yes. If it comes out right now, no one will care.
Letter just reported Nvidia earnings are now 10 minutes late. No statement from the company.
We're green. Green. 200. Above 200. Now red. Wow. What was that?
And back to green.
Okay, I'm looking at the stock. If you guys have the numbers.
I have the numbers. Revenue came in $68.1 billion. Gross margin 75% expanded. Net income $42.96 billion.
So EPS 162, revenue 68. That's a $3 billion beat on revenue, or $2 billion. EPS is a beat by about 20 cents. Data center revenue 62.3 billion. What is the guide? The guide is going to be the big question here.
Revenue beat of 3% versus Wall Street expectations is actually pretty big versus what they've been in most recent quarters, only beating by 1 to 2%.
Nvidia says computing demand is growing exponentially.
It's above 200.
Above 200, 201 right here. We need the guide. I'm still looking for the guide. That's the big one, right? Next quarter, we need above 73, if I'm not wrong. That's the number. Got a double beat. The guide, still don't have that.
First quarter fiscal year 2027 revenues expected to be $78 billion plus or minus.
What the holy guacamole?
Yeah.
Oh
GAAP
my
gross
goodness.
margins 79%, 74.9% to 75%, so flat. Operating expenses 7.7 to 7.5 billion dollars.
Guys, the street wanted 73 billion. They are guiding to 79.5 on the high end, which you know they're going to beat because they always do. 76 to 79, put it in the middle, 77. That is a $5 billion beat on the guide. More likely $8 billion beat on the guide.
What's the percentage on that? I haven't plugged my numbers yet. What's the year-over-year growth rate on that? Is that past 65%?
Let me see. That is, let's see if we can bet this up.
I don't have the numbers for last.
Oh, that would be, so they did 44. They did 44 last year. So let's do 79 minus 44. That is 79% growth?
Woo!
79 they're guiding for. They did 44 last year. I'm not getting that wrong. 44. Yep, 44.1. When you do the math, folks, that's 80% growth.
That's reacceleration.
That's a little bit of reacceleration. 80%?
I'm honestly, man, like this is going to be 100-bagger for us. Like,
no, but hold on. This is unbelievable. And they're going to beat 79. They're probably going to come in at like 81. They always beat by about a couple billion. Always.
Yep. That's insane. That is insane.
I mean, again, forget the price action. It probably should be up more, but forget that. Like, these are, if you're holding on to the stock and you think it's a bubble, I mean, or you think the cycle's over, it doesn't look like it.
Or that any other company is taking.
Doesn't look like it. Got some coverage right here.
AMD is taking the steam away or anything like this.
Including China yet. We'll find out on the call, but dude, who would have thought?
No, it doesn't include China. I just read.
Sky, thanks for
It doesn't?
Nope. No China at all. Nothing at all.
That's crazy.
EPS. So we see a beat on the top and bottom line, $1.62 adjusted, which is higher than the buy side Q4 expectations on revenues of 68.1. That's up 20% quarter over quarter, so sequentially. For data center revenue, also coming in exactly in line with what buy side was estimating, higher than sell side, $62 billion. Gross margins, we have these concerns about memory prices, et cetera. Gross margins coming in at 75%. I'll come back with some quotes that there's a long one here from Jensen himself, and we'll get you more numbers too.
All right, Christina, thank you. The stock higher by almost 3%. Brenda.
I could actually freaking cry, dude.
Stock's moving. Stock's moving here.
Cry for us, man. It's a safe place.
Do you honestly think, Amit, them growing at 75, 80% growth rates going forward, they're not going to be past 250? You're saying that Walmart should be priced higher than this company.
I'm not saying that, but when you put up numbers like this, yeah, probably going higher.
This is unreal. This has never happened in public market history ever. This is a one-of-one company. There's nothing like this. Unreal that you get to invest in this company at DeepSeek moments when it was $80 a share and shit like this. Sorry, I shouldn't swear.
And to your passion, a lot of retail, a lot of people watching, put in the chat. I know I did. I started building my position on that DeepSeek nonsense. I mean, and retail in particular, we trusted in this. And, you know, regardless of what happens to the stock will eventually follow the fundamentals. But 65 to 80% reacceleration in Q1 after the declining growth, which the declining growth, the worst it got to was 60%, is unbelievable. Unbelievable. And if this is happening for Nvidia, that means ChatGPT is growing. That means Anthropic is growing. That means all the hyperscalers need even more compute to keep up with the demand because of Nvidia's chip demand in and of itself. That means the hyperscalers are ready to spend more. That means sovereign AI demand is probably coming in. That means robotics are probably going to start to tick in. If we don't even have China yet, I mean, that number could be even higher. So the fact that this stock's not up 10% right now, once again, means the market is still afraid of the cyclicality of it, which is fair. That's what keeps the multiple reasonable. But at some point, the multiple is going to continue to be unreasonable if they keep growing like this.
Gross margin went back up to 75% too, like they
Yeah,
said. I know that was one of the things that they were scared about. And I mean, everything Tanner's saying, I feel, but I think he says it a lot better. So go ahead, Tanner. Keep.
No, dude, I feel like a psycho right now, just screaming into this mic. But honestly, I'm just. Everyone knows, like, I have a large position in SoFi. My position in Nvidia is like 5 times larger. Like, everything is betting on this company. Half my net worth is in this company. I just feel, excited about the actual price movement, but more on knowing that this build out is going to be for a very long time. And I can probably sit comfortable and not even have to worry about these shares for another, at least 24 months, just based on this guidance alone.
And to Tanner's point, Walmart still trades at a higher multiple than a company that's about to do 80% growth at 75% gross margins.
You know what's crazy?
Walmart has 4% growth at 3% margins.
I'm pretty sure with this guidance, we're still going to be trading at mid to low high 20s forward PE ratio. Even with the stock going up to $200 with this guidance, that forward PE is still going to look crazy cheap.
We need a 5.2% move to be a $5 trillion company again.
I mean, I've said for the longest time, this is probably five years ago that I said this with Steve, this will be the first $10 trillion company. It will be.
Definitely.
Dude, 202.60 right there. I'm trying to pull up the actual...
You're getting some bullish sentiment too. CoreWeave, ARN, MBS are all up right now, about 1-2% after following that.
Yeah, they don't have the actual deck up online yet. Still looking for some other results. Some quotes from Jensen. We have data center revenues up nearly 13x since ChatGPT came out. Customers are racing to invest in AI compute. Computing demand is growing exponentially. Nvidia guide, you're right, doesn't assume any China data center compute revenue. That means they're guiding for 80% growth and they don't even have China.
It's unreal, dude.
I mean, if this thing dips back to 180 for whatever reason throughout any course of the next 5 months, outside of broad macro drawdown, it's going to be something that's on the list for a lot of institutions when institutions want growth. You're getting it from Nvidia, accelerating growth.
I mean, easily tomorrow we're going to wake up to various price target hikes. No doubt, where everybody missed that guidance completely. I think even the bullish end was a little bit wrong.
Jay Goldberg is going to say, it was an all right quarter, or something like, it's okay, I'll give it to them.
We talked about him last time, right? I don't remember. I don't really follow much bears because there's something wrong with them if you're bearish in this company. But I think we saw him last time on a quick view.
Was it worth the 10 or 15 minute wait?
It was worth the wait. Corning's up 2%. CoreWeave's up 2%. I know a lot of people are invested in the NeoCloud proxies. Nebius, that's up 1.7. I mean, where's the SPY? The S&P 695.
Amcor is up 2.5%.
What'd you say?
Amcor is up 2.5%.
Palantir's up. Amcor's up. I mean, yeah, this is what the market definitely needed. And boy, did they beat it. They could have been conservative and said, we'll do 76, 75. They said, we're going to do basically $80 billion.
Which means they're being conservative.
Mm-hmm. That's them being conservative. That's crazy.
Like, they didn't include China revenue, dude. Like, they're going to put up $80 billion next quarter. $80 billion. And then people say, oh, they're investing more in CoreWeave. Where are they finding the money? Like, dude, they invested $2 billion into CoreWeave. They beat expectations by more than the amount of money that they gave CoreWeave. Like, it's a nothing to them.
They have 60 billion in cash. They just said to 60, 65, 64, I think, in cash right now.
They're a money printing machine.
Really higher at 78 billion. Non-GAAP gross margins, to Gil's point, just about memory costs and how they're going to address that. That's coming in roughly in line with estimates at 75%. So this is Q1 non-GAAP gross margins, which often takes a hit when you have higher costs when revolving around memory. And then that quote I was talking about, they specifically highlight enterprise adoption of agents is skyrocketing, which would mean more of the inference side of the large language model. Our customers are racing to invest in AI compute. The factories, okay, the rest is just typical jargon, but what you need to know is that really this Q1 revenue guide is substantially higher. I'll come back with some details on gaming because I think there's a line in there that's important.
After our session highs pretty much right now, up 3.7%. Gil, I'm just curious, color on that gross margin guidance, 75%, given, when you go more towards B300 versus B200, the gross margin should be 20 to 30% higher, not in line with what it was before.
Well, the main driver of the gross margins for the last couple of years has been transitions from one model to the other. So since they are almost entirely Blackwell now, they are getting the higher margins. I would actually expect that as they roll out Rubin, we may step back into the lower 70s, just like we stepped into the lower 70s when we were rolling from Hopper to Blackwell. That's the main driver, and that will probably continue generation to generation as long as memory is not an issue, either because they pre-bought or they're passing along those costs to customers. That range of gross margins is fantastic. And
I mean, keeping that gross margin level is crazy. 75% right here. Question for you, Tanner. Where do you think this 80 billion is coming from? You're muted.
You're muted.
The Core 4. They ended up showing off capital expenditure growth of 70% year over year. Where else? Like that's not including new names that are entering the space. You have Nebius and CoreWeave starting to really get to scale. They're talking about $20+ billion of Capex. And honestly, I think all these companies are going to end up putting up bigger numbers than this. Because the products that they're making are real and they're extremely helpful. Now, honestly, you should play the Perplexity Compute video that ended up coming out today. This is we're living in a new world of technology where these products are extremely helpful and anyone can use them. That's going to demand a premium. People are going to pay for it. Make sure you mute the sound. There's sound if you're going to play that video, but yeah.
Yeah, let me pull it up. You can talk us through what we're looking at. But once again, there's more and more use cases for compute. And obviously that goes back to Nvidia. And I think this one is going to have, this one is actually asking.
You should pause it right there on that prompt that he says. Like, just think, this is not a chat bot. This is, run it forward just a little bit just to finish the prompt. There. Okay. They threw in an Excel spreadsheet. They said, update this model with the latest analyst estimates, pull multiples and order books from AMD, Broadcom, Intel, Qualcomm, TSM, and ASML. Why does that sound weird to me? Via the Polygon API, and download their latest supplier and consumer import data and visualize it in a web app. Rerun this every time earnings drop. This is people's jobs. Like that's someone's career to do this type of work. And then you can see, now this is their max tier. You have to spend, I think it's like $200 a month for this, but it will run all of this. It'll create the web apps. It'll do all of it from a single prompt. Now it seems a little futuristic, but I've been playing around with Base 44. I've been using these tools. It absolutely works, and the error rates are falling, like meaning they're more effective. The amount of time that I've spent, or Stephen Fiorillo, or these guys manually plugging in data or creating these websites takes a very long time. Now you can set not just one agent, like a non-efficient person would set one agent and then wait for it to complete its work and then continue working. That's not what these people are doing. They're opening.
That's crazy. Do you know how many people
this was crazy. Yeah.
make TikTok clips?
Yeah.
Wow.
And so you would run all of these simultaneously. Open up not 10 tabs, open up 100 tabs. Like, tell this thing to constantly run scripts. You're setting it tasks and saying, go do this. I'm going to go set my next goal, and it will constantly set up new tasks for you. Everyone is going to be able to sprint at faster speeds than anyone's been able to sprint at. You're giving unbelievable tools to the everyday user. And everyone's going to have this type of ability. Why do you think Sam Altman now, you're getting to start to see why Sam Altman spent $1.5 trillion is because they've been working on these tools, and they're going, man, whenever everyone gets their hands on this, there's going to be an explosion of needed compute. Google sees it, Meta sees it, Amazon and every single name. And so they're like, holy, we're not slowing down Capex because the use cases from this. This is going to drastically change GDP growth here. Like, people are going to supercharge their productivity. It's going to happen. Amit literally spends time making his thumbnails every day. That would be one task that you set every day. Hey, go look through all my notes, take the big market news that I'm going to be covering for the day, and make me a thumbnail in the design that I like every day. That will be the prompt. You won't even have to tell it anything more. It knows you, Amit. You've told it before. You've asked it, hey, how do I do my intros? What's so unique about Amit? It knows. And this is the worst artificial intelligence will ever be.
And that's a relatively small example. In the enterprise, it's not about making thumbnails. It's about doing stuff that leads to real revenue growth, which is GDP growth. So I agree. This is going to be pretty incredible. We got some quotes from Nvidia. U.S. granted license for specific China-based customers. U.S. granted license to ship H200 to China-based clients. So looks like...
And they still didn't include it.
Yeah, they got the license, but they didn't include it in the guide, which means if they eventually include it, it's another beat.
People are saying, like, peak euphoria. This is a top, and like obviously Tanner's overly excited. But how do you put this genie back in the bottle? Like, how does it get worse from here? You know what I mean?
I mean, hold on, peak euphoria. But last year they did $15 billion in free cash flow. Not talking about revenue. We're talking about free cash flow. They just did $35 billion in free cash flow. We're talking about over 100% year-over-year growth. If that slows down to 70%, okay, but like, it's not slowing down.
Yeah, I'm not simping over Jensen. They just increased growth to way high. I never thought they'd get back into the 70s. They're going to hit 80% growth. Like, they're like, look at the numbers, guys. This is happening.
I mean, Tanner, I don't think you're crazy. I think this is still early innings. Extremely early innings. I mean, technology is just going to continue to innovate. I mean, we don't have robots yet. We don't have autonomous driving vehicles to the full extent. I mean, AI software is definitely there, but it can improve dramatically. It still can improve from there. There's so much more that can come from this. So, and I think this is what it takes to be kind of one of these AI investors is you either have to believe in this story or you don't, because if you don't believe in this story, the next time a DeepSeek moment happens, the next time someone slows down some data center, you're going to have weak hands and sell off on shares that you would gladly buy from. So to me, my portfolio is pretty much AI stocks. That's it. Because I think we are extremely early here. And Capex is not slowing down this year, and I don't think it's going to slow down in 2027. 2028 is still too early to tell, but based on what we're seeing, it's really, really, really early.
Yeah, I've really transitioned my portfolio more away from the software and more toward the semiconductor supply chain, because like clearly we're still in that phase. Like for the last 3 years, everyone's always wondering, including myself, like when are we going to hit phase 2 where software starts monetizing off this? And I mean, they're not, at least not yet. I think they will eventually, but right now it's still the build out phase, and the build out phase is the beginning of the entire fourth industrial revolution. So if we're still there, you can imagine how long this entire cycle is going to take. And it's not going to be a straight line, but it's crazy that this is still growing at 70, 79%, 78% next quarter, and margins expanded. Like,
I mean, revenues at 73, operating income's at 84%, net income almost 100% year-over-year growth, 22 to 42 billion.
Yeah.
This is not easily slowing down. And again, the biggest concern, the reason I think Tanner is so excited here, because the biggest concern for this quarter was the guide. Everyone was thinking, okay, we know they're going to crush the earning, but like, what will they guide? I don't think people expected 80 billion on the guide.
And I just think also, not just on the build out, but I also think Nvidia is one of the easier names to play. You know, many people want to play this through other proxies, whether that's energy or, you know, QXO, like the actual build outs of these, like the construction companies. And there's going to be many ways. But I always worry about what's the next innovation of the next chips? How energy efficient are the next chips going to get? Or like they made big advancements on the liquid cooling and saving temperature costs and all this stuff. Like, I don't know what NVIDIA is going to do, but every iteration of, you know, future AI build out, whether this is Elon talking about it being in space and all of this stuff, it all includes GPUs. And so for me, it's just easy to pick the name that is actually putting up the largest numbers. Like AMD might put up good numbers, but right now the actual data center growth, I think theirs was 39% last quarter. Some pretty hopeful growth going forward, but I think that growth is also going to be pretty exciting for NVIDIA as well.
TSM trying to push 400. We will have the call in about 8 minutes. Nebius up 1, S&P up about 0.2. Put in the chat what your raw reaction is to these numbers. I know we're not getting a massive pump, but then again, the stock was at 185 last week. So, you know, since the lead up to earnings, it has made a move. And I kind of think not getting a pump is a great situation to be in, because once again, like the entire thesis that a lot of the bears have is that multiples are euphoric, valuations have to compress. This is a dot-com bubble. Nvidia is going to open up tomorrow at what, 27 times, maybe even lower than
27, 28, yeah.
Even with the $3 move, like that's not euphoric. So if it slowly stays here and eventually grinds higher, I think that's the bet versus 220 right now, and then a steep fall. Which if it did hit 220, that wouldn't be crazy.
Because remember, right, those forward PE ratios are all based on analyst expectations, and we figured out they were wrong. The average was what, 71 billion. So they have to all go back and rework their numbers. For the 71 billion, the average is now going to be 78 billion for the upcoming quarters. And then they're most likely have to upgrade all the other ones for the rest of the quarter. It's going to be crazy on some of the price targets I think we're going to see tomorrow for NVIDIA.
Yeah.
Yeah. The average price target, by the way, is 265. So, I mean, that might go higher. By the way, NVIDIA did say that those chips to China will have a 25% tariff on them. It's called a U.S. import tariff. I don't know if I think that's separate from IEEPA because they're not a country. So they will have to give up 25 cents on the dollar to the U.S. To ship these.
But that was the part of the deal, right? It's like if to open up, we'll give it. So.
And from my understanding, they also want the Chinese customers to pay upfront, no payment plans, because they could always cancel those deals. So these are actually some pretty lucrative customers, and any amount that they're going to take a hit on margin will be charged to those customers. That it's not even like Jensen's bending over backwards for them to actually buy the chips. It's like, hey, you know what? If you want these chips, well, then you're going to have to comply with the prices that we end up putting up and the payment terms. So
I'm going to be curious to hear the bear case after this quarter. What exactly do they, because the whole GPU depreciation thing, that's
It's
the
the same
exact
case.
same ones, the exact
Is
same
this
ones that
the
we saw
top?
before.
That's it. Is this the top? And I think it is probably one of the biggest things, and it's definitely not.
Yeah, it'll be all the exact same. Nothing's going to change. People for real are not believing this. They're not believing this is happening.
Yeah, and it's usually people who missed it. They will say Nvidia is overvalued. They have no moat, whatever it is. You go ahead.
Grades, the getting the generators and all the rest.
Yeah, it's really important to know that if a year or two ago the bottleneck was Nvidia chips, it is no longer Nvidia chips. It is exactly those things that you said. And the top three bottlenecks we see are advanced packaging, memory, and optical. Those are the places where we don't have enough capacity to keep growing at the rates we've been growing. So Nvidia, fortunately for them, has all the customers. And so they're waiting for data centers to light up. As soon as a data center can go warm, GPUs ship there. So that's also why they don't need it to hold as much inventory, is because they're just waiting for everybody else to be ready for their chips and they can ship them. And then the data center can turn on to run the AI compute. So the bottlenecks are now well beyond Nvidia. They don't necessarily control them. But by the way, by seeding the ecosystem, they help their customers get through those bottlenecks. Because if you're talking about electricity, for instance, we thought we'd have this issue with we're not going to have enough electricity from the grid. We blew past that because we're putting generation behind the meter. We're just building turbines and we're putting those in the data centers to run the data centers. That's just a matter of spend. The more there's a return on this for their big customers, the more they're willing to spend on blowing through these bottlenecks. And that's what we've seen so far.
Last question in terms of market impact of the Nvidia results. Do you read this and say the AI trade is on and therefore the AI disruption trade is also back on? Because we're seeing, so Snowflake was higher in the after-hour session initially in the back of earnings, turned lower. CRM was lower from the get-go. Workday in the after-hour session right now is down 1%.
Where did Microsoft, even though we've been away for all these weeks, you're still inside my head. Does that mean the disruption trade in the at some point software is going to be an overshoot, and I'm not going to play that game yet because it's a tough game. But in the fall, software was a winner here. Everybody was saying, you know what, software wins the AI, and look how fast it turned on the back of the Oracle announcement from September 10th. I mean, that is.
And if we see Jensen give some good commentary for the software names, that would be important today. Tanner, if you were an analyst on the call, what would be the question you ask?
Ooh. I don't know. Probably something about China. Like, obviously, they neglected to include Chinese sales, but if they had to, what would that look like? You know. So anything regarding conversations or you know, what's happening with China sales?
Sam, same question to you. If you were an analyst, what would you ask? Same thing to the chat. What would you ask Jensen if you're on the call?
Why'd you make us wait, bro?
Yeah.
Why'd you make us wait? We sat over here for 15 extra minutes. Wait. What would I ask is what helped the margin contraction and why was the original guide less than what actually came out? And why do they think that margin is going to be stagnant for the following quarter? Was it better than expected? And also they mentioned the constraints, the supply is going to have an impact for the gaming revenue. I did actually expect gaming revenue to be a big contributor in the next couple of years or actually help lift up those revenues. But I'd like to hear more commentary on that one because that's going to give insight into like the mobile sector or the PC gaming sector, which I had thought we bottomed. But if they say the supply constraints, then that might, you know, what are the signs of that one? Because there's a lot of people waiting for a lot of those PC gaming sectors to come up, and that's going to give light into AMD as well, since they're very big into PC gaming.
Yeah, I would think for the PC gaming, that's going to suck this year and next year, just because the supply constraint, I think it's one thing, it's memory. Memory companies are escaping from the consumer space and are rather focusing that on kind of either AI servers, GPU, VRAM, or in HBM, which they tend to get a lot better margins off. So I think that's the supply constraint. They will talk about the gaming side is pretty much memory. So I'm not too hopeful for the consumer space this year. just because AI data centers and servers are taking that whole supply chain for them.
Yeah, they're getting priced out of the market.
Okay, we are almost ready for the call to start. It is not started yet. So,
Do you have a way to get the stock on as well?
Yeah, we'll show that. We do have your boy Jay. Let's get his raw reaction to these numbers.
Anything in
Is this the bear? Oh, yes, it is. Okay.
confirms your thesis, or does it sort of go against the sell rating that you have on Nvidia?
Yeah, it's a good quarter. It's a good quarter and a good guide. It's above consensus. It's above my expectations. So good for them. We're still waiting to see a lot more detail.
What do you want to see?
I want to hear more how to talk about gross margin for next quarter. I think that's going to be in the CFO commentary.
Yeah.
Ed, jump in.
Do you have
Go
that?
ahead.
Yeah.
No, I don't have it yet, but it will be in the CFO commentary.
But 75.2% versus 75% expectations. I mean, can Ed, can you use that as sort of a guide for how the company could see first quarter?
Yeah, not assuming anything.
Automakers, like who's buying?
Well, I think that's one of the most interesting things that's taking place with Nvidia is they're not just reshaping the semiconductor industry, they're trying to reshape the cloud computing industry as well. And that's why we see all these neo clouds getting investment from or support from Nvidia. Nvidia would much rather have 100.
This guy just can't say, "Hey, I'm wrong." Maybe it is. God darn it! What the heck?
It is so hard being a bear. It really is.
It's a good quarter. Good for them. So yeah.
Here's the call.
Good luck, everyone.
Actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Toshio. We delivered another outstanding quarter with record revenue, operating income, and free cash flow. Total revenue of $68 billion was up 73% year over year, accelerating from Q3. Growth on a sequential basis was also a record as we added $11 billion in data center revenue across a diverse and expanding set of customers, including cloud providers, hyperscalers, AI model makers, enterprises, and sovereign nations. Demand for our Blackwell architecture, extreme co-designed at data center scale, continues to strengthen as inference deployments grow in addition to training. The transition to accelerated computing and the infusion of AI across existing hyperscale workloads continue to fuel our growth. Agentic and physical AI applications built on increasingly smarter and multimodal models are beginning to drive our financial performance. On a full year basis, data center generated revenue of $194 billion, up 68% year over year. We have now scaled our data center business by nearly 13x since the emergence of ChatGPT in fiscal 2023. We look ahead, we expect sequential revenue growth throughout calendar 2026, exceeding what was included in the $500 billion Blackwell and Rubin revenue opportunity we shared last year. We believe we have inventory and supply commitments in place to address future demand, including shipments extending into calendar 2027. Every data center is power constrained. Customers make critical architectural decisions based on performance per watt, given these constraints and the need to maximize AI factory revenue. SemiAnalysis declared Nvidia Inference King, as recent results from Inference X reinforced our inference leadership, with GB300 NVL72 achieving up to 50x performance per watt and 35x lower cost per token compared with Hopper. And continuous optimization of CUDA software helped deliver up to 5 times better performance on GB200 NVL72 just within 4 months. Nvidia produces the lowest cost per token, and data centers running on Nvidia generate the highest revenues. Our pace of innovation, particularly at our scale, is unmatched, fueled by an annual R&D budget approaching $20 billion and our ability to extreme co-design across compute and networking across chips, systems, algorithms, and softwares. We intend to deliver X factor leaps in performance per watt every generation and extend our leadership position over the long term. Q4 data center revenue of $62 billion increased 75% year over year and 22% sequentially, driven primarily by sustained strength in Blackwell and the Blackwell Ultra ramp. With Nvidia infrastructure in high demand, even Hopper and much of the 6-year-old Ampere-based products are sold out in the cloud. Nearly a year has passed since the release of our Grace Blackwell NVL72 systems. Today, nearly 9 gigawatts of infrastructure on Blackwell are deployed and consumed by the major cloud service providers, hyperscalers, AI model makers, and enterprises. Networking, a cornerstone of our data center scale infrastructure offering, was a standout this quarter, generating $11 billion in revenue, up more than 3.5x year over year. Demand for our scale up and scale out technologies reached record levels, both growing double digits sequentially, driven by strong adoption of NVLink, Spectrum-X Ethernet, and InfiniBand. On a year-over-year basis, growth was driven primarily by NVLink 72 scale-up switches, as Grace Blackwell systems accounted for roughly 2/3 of data center revenue in the quarter. NVLink scale-up fabric has revolutionized computing and demonstrates the power of extreme co-design across all of the chips of the supercomputer and the full stack. In Q4, we announced that we will enable AWS with NVLink to integrate with their custom silicon. Momentum is strong with our Spectrum-X Ethernet scale-up and scale-across networking as customers work to unify distributed data centers into integrated gigascale AI factories. For the full year, our networking business exceeded $31 billion in revenue, up more than 10x compared to fiscal 2021, the year we acquired Mellanox. Our demand profile is broad, diverse, and expanding beyond just chatbots. First, there's a fundamental platform shift from classical machine learning to generative AI. Strong evidence of ROI as hyperscalers upgrade massive traditional workloads to generative AI, including search, ad generation, and content recommender systems, is encouraging our largest customers to accelerate their capital spending. For example, at Meta, advancements in their GEM model drove a 3.5 increase in ad clicks on Facebook and more than 1% gain in conversations on Instagram, translating into meaningful revenue growth. With the same NVIDIA infrastructure, Meta Superintelligence Labs can train and deploy their frontier agentic AI systems. Frontier agentic systems have reached an inflection point. Claude Code, Claude Cowork, and OpenAI Codex have achieved useful intelligence. Adoption is skyrocketing, and tokens are profitable, driving extreme urgency to scale up compute. Compute directly translates to intelligence and revenue growth. Analyst expectations for 2026 Capex across the top 5 cloud providers and hyperscalers, who collectively account for a little over 50% of our data center revenue, are up nearly $120 billion since the start of the year and approaching $700 billion. We continue to expect the transition of classic data center workloads to GPU accelerated computing and the use of AI to enhance today's hyperscale workloads and contribute toward roughly half of our long-term opportunity. Every country will build and operate some parts of its AI infrastructure, just like with electricity and internet today. In fiscal year 2026, our sovereign AI business more than tripled year over year and over $30 billion, driven primarily by customers based in Canada, France, the Netherlands, Singapore, and the UK. Over the long run, we expect our sovereign opportunity to grow at least in line with the AI infrastructure market as countries spend on AI proportional to their GDP. While small amounts of H200 products for China-based customers were approved by the US government, we have yet to generate any revenue, and we do not know whether any imports will be allowed into China. Our competitors in China, bolstered by recent IPOs, are making progress and have the potential to disrupt the structure of the global AI industry over the long term. To sustain its leadership position in AI compute, America must engage every developer and be the platform for choice for every commercial business, including those in China. We will continue to engage with the US and China governments and advocate for America's ability to compete around the world. We unveiled the Rubin platform last month at CES, comprised of 6 new chips: the Vera CPU, Rubin GPU, NVLink 6 switch, ConnectX-9 SuperNIC, Bluefield 4 DPU, and Spectrum 6 Ethernet switch. The platform will train MOE models with 1/4 the number of GPUs and reduce inference token costs by up to 10x compared to Blackwell. We shipped our first Vera Rubin samples to customers earlier this week, and we remain on track to commence production shipments in the second half of the year. Based on its modular, cable-free tray design, Rubin will deliver improved resiliency and serviceability relative to Blackwell. We expect every cloud model builder to deploy Vera Rubin. Moving to gaming. Gaming revenue of $3.7 billion increased 47% year on year, driven by strong Blackwell demand and improved supply. GeForce RTX is the leading platform for PC gamers, creators, and developers. In Q4, we added several new technologies and advancements, including DLSS 4.5, which uses AI to bring game visuals to a new level. G-Sync Pulsar, bringing incredible clear graphics even in motion, and 35% faster LLM inference across leading AI PC frameworks. Looking ahead, while end demand for our products remains strong and channel inventory levels are healthy, we expect supply constraints to be the headwind to gaming in Q1 and beyond. For professional visualization, it crossed the $1 billion mark for the first time, with revenue of $1.3 billion, up 159% year over year and 74% sequentially. During the quarter, we launched the RTX Pro 5000 Blackwell workstation with 72 gigabytes of fast memory for AI developers running LLMs and agentic workflows. Automotive revenue of $604 million was up 6% year over year and was driven by robust demand for self-driving solutions. At CES, we introduced Alpamayo, the world's first open portfolio of reasoning, vision, language, action models simulation blueprints, and data sets enabling vehicles that can think. The first passenger car featuring Alpamayo, built on Nvidia Drive, will be on the road soon in the new Mercedes-Benz CLA. Physical AI is here, having already contributed north of $6 billion in Nvidia revenue in fiscal year 2026. Robotaxi rides are growing exponentially with commercial fleets from Waymo, Tesla, Uber, WeRide, and Zoox. And many others are expected to scale from thousands of vehicles in 2025 to millions over the next decade, creating a market poised to generate hundreds of billions of dollars of revenue. This expansion will demand orders of a magnitude more compute, with every major OEM and service provider developing on NVIDIA's platform. We continue to advance robotics development with the new NVIDIA Cosmos and Isaac Group, open models, frameworks, and NVIDIA's powered robots and autonomous machines for leading companies, including Boston Dynamics, Caterpillar, Franco Robotics, LG Electronics, and Neuro Robotics. To accelerate industrial physical AI adoption, we also announced new expanding partnerships with Dassault Systems, Siemens, and Synopsys to bring NVIDIA AI infrastructure, Omniverse digital twins, world models, and CUDA-X libraries to millions of researchers, designers, and engineers building the world's industries. Let's move to the rest of the P&L. GAAP gross margin was 75%, and non-GAAP gross margin was 75.2%, increasing sequentially as Blackwell continued to ramp. GAAP operating expenses were up 16% sequentially and up 21% on a non-GAAP basis related to new product introductions and compute and infrastructure costs. Non-GAAP effective tax rate for the fourth quarter was 15.4%, below our outlook for the quarter, primarily due to the impact of a one-time tax benefit. Inventory grew 8% quarter over quarter, while purchase commitments also increased significantly, as we have strategically secured inventory and capacity to meet demand beyond the next several quarters. This is further out in time than usual and reflects the longer demand visibility we have. While we expect tightness in the supply for our advanced architectures to persist, we remain confident in our ability to capitalize on the growth opportunity ahead with our scale, expansive supply chain, and the long-standing partnerships continuing to serve us well. We generated free cash flow of $35 billion in Q4 and $97 billion in fiscal year 2026. For the year, we returned $41 billion, or 43% of free cash flow, to our shareholders in the form of share repurchases and dividends. We continue to invest in our technology and our ecosystem to cultivate market development, drive long-term growth, and ultimately yield total shareholder returns superior to the market or our peer group. Importantly, we will continue to run a strategic and disciplined process as it relates to our investments, and we remain committed to returning capital to our shareholders. Let me turn to the outlook for the first quarter. Starting this quarter, we will be including stock-based compensation expense in our non-GAAP results. Stock-based compensation is a foundational component of our compensation program to attract and retain world-class talent. Let me first start with revenue. Total revenue is expected to be $78 billion, plus or minus 2%. We expect most of our growth to be driven by data center. Consistent with last quarter, we are not assuming any data center compute revenue from China in our outlook. GAAP and non-GAAP gross margins are expected to be 74.9% and 75% respectively, plus or minus 50 basis points. For the full year, we continue to see gross margins in the mid-70s. We will keep you updated on our progress as we prepare for the Vera Rubin transition. GAAP and non-GAAP operating expenses are expected to be approximately $7.7 billion and $7.5 billion, respectively, including stock-based compensation expense of $1.9 billion. For the full year, we expect non-GAAP operating expenses to grow in the low 40s on a year-over-year basis as we continue to invest in our expanding.
Expanding what, Colette?
That's not me.
Opportunity set. For the full year, fiscal year 27, we expect GAAP and non-GAAP tax rates to be in between 7 and 19%, excluding any discrete items and material changes to our tax environment. With that, let me turn the call over to Jensen. I think he has a few words for us.
This quarter, we significantly deepened and expanded our partnerships with leading frontier model makers. We recently celebrated OpenAI's launch of GPT 5.3 Codex, trained with and inferencing on Grace Blackwell NVLink 72 systems. GPT 5.3 Codex can take on long-running tasks that involve research, tool use, and complex execution. 5.3 Codex is deployed broadly inside Nvidia. Our engineers love it. We continue to work with OpenAI toward a partnership agreement and believe we are close. We are thrilled with our ongoing partnership with OpenAI, a once-in-a-generation company we've had the pleasure of partnering with since their first days. Meta Superintelligence Labs is scaling up at lightning speed. Last week, we announced that Meta is deploying millions of Blackwells and Rubin GPUs, Nvidia CPUs, and Spectrum-X Ethernet for training and inference. This quarter, we announced a partnership with Anthropic and a $10 billion investment in their company. Anthropic will train and inference on Grace Blackwell and Vera Rubin systems. Anthropic's Claude Codework agent platform is revolutionary and has opened the floodgates for enterprise AI adoption. Between Claude Codework and OpenClaw, compute demand is skyrocketing, and ChatGPT moment of agentic AI has arrived. With partnerships spanning Anthropic, Meta, OpenAI, and xAI, Nvidia deployed across every cloud, and with our ability to build full-stack AI infrastructure from the ground up or support them in the cloud. We're uniquely positioned to partner with frontier model builders at every stage: training, inference, and AI factory scale-out. Finally, we recently entered into a non-exclusive licensing agreement with Grok for its low-latency inference technology and welcomed a team of brilliant engineers to Nvidia. As we did with Mellanox, we will extend Nvidia's architecture with Grok's innovations to enable new levels of AI infrastructure performance and value. We look forward to sharing more at GTC next month. Okay, back to you.
We will now transition to Q&A. Operator, please poll for questions.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. I think you mentioned that you now have growth visibility into calendar 27 also, and I think your purchase commitments kind of reflect that confidence. But Jensen, I'm curious, when you look at your top cloud customers, cloud Capex close to $700 billion this year, many investors are concerned that it would be harder for this level to grow into next year. And for several of them, their cash flow generation capability is also getting compressed. So I know you're very confident about your roadmap, right, and your purchase commitments and whatnot, but how confident are you about your customers' ability to continue to grow their Capex? And if their Capex doesn't grow, can Nvidia still find a way to grow in that envelope? Thank you.
I am confident in their cash flow growing. And the reason for that is very simple. We have now seen the inflection of agentic AI and the usefulness of agents across the world in enterprises everywhere. You're seeing incredible compute demand because of it. In this new world of AI, compute is revenues. Without compute, there's no way to generate tokens. Without tokens, there's no way to grow revenues. So in this new world of AI, compute equals revenues. And I am certain that at this point, with the productive use of Codex and Claude Code and the excitement around Claude Cowork and just the incredible enthusiasm about OpenClaw and the enterprise versions of them. All of the enterprise ISVs who are now working on agentic systems on top of their tools platforms. I'm certain at this point that we are at the inflection point. We've reached the inflection point, and we're generating profitable tokens that are productive for customers and profitable for the cloud service providers. And so the simple logic of it, the simple way to think about it is computing has changed. What used to be software running on computers, modest amount of computers, call it $300 or $400 billion worth of Capex each year, has now gone into AI. And AI, in order to generate tokens, you need compute capacity. And that translates directly to growth, and that translates directly to revenues.
Your next question comes from Joe Moore with Morgan Stanley. Your line is open.
Great, thank you, and congratulations on the numbers. You talked about some of the strategic investments that you've made into Anthropic and potentially OpenAI, CoreWeave as well, but also partners, Intel, Nokia, Synopsys. You're clearly at the center of everything. Can you talk about the role of those investments and kind of how do you view the balance sheet as a tool to kind of grow NVIDIA's position in the ecosystem and participate in that growth?
As you know, fundamentally at the core of everything NVIDIA is our ecosystem. That's what everybody loves about our business. The richness of our ecosystem. Just about every startup in the world is working on NVIDIA's platform. We're in every cloud. We're in every on-prem data center. We're all over the world's edge and robotic systems. Thousands of AI natives are built on top of NVIDIA. We want to take the great opportunity that we have as we're in the beginning of this new computing era, this new computing platform shift, to put everybody on NVIDIA. Everything is already built on CUDA, and so we're starting from a really terrific starting point. But as we build out the entire AI ecosystem, whether it's in AI for language or physical AI or AI physics or biology or robotics or manufacturing, we want all of these ecosystems to be built on top of NVIDIA. And this is such a wonderful opportunity for us to invest into the ecosystem across the entire stack. Our ecosystem is also richer today than it used to be. We used to be largely a computing platform on GPUs, but now we're a computing AI infrastructure company, and we have computing platforms on, well, every aspect of that. And everything from computing to AI models to networking to our DPU, all of that has computing stacks on top of it. And as I mentioned before, whether it's in enterprise or in manufacturing, industrial, or science or robotics, each one of these ecosystems have different stacks. And we want to make sure that we continue to invest into our ecosystem. So our investments are focused very squarely, strategically on expanding and deepening our ecosystem reach.
Your next question comes from Harlan Sur with JP Morgan. Your line is open.
Hey, good afternoon. Thanks for taking my question. Networking continues to rise as a percentage of your overall data center profile, right? Through fiscal 26, your networking revenues accelerated on a year-over-year basis every single quarter, right? With 3.6x growth, as you guys mentioned, year-over-year growth in Q4. Obviously, on the strength of your scale-up and scale-out networking product portfolio, I seem to remember that first half of last year, your annualized run rate on your Spectrum-X Ethernet switching platform was around 10 billion annualized. It looks like that may have stepped up to around 11, 12 billion in the second half of last year. Jensen, looking at your order book, especially with Spectrum XGS, upcoming 102T Spectrum 6 switching platforms launching soon, where is the Spectrum run rate trending now and as you foresee exiting sort of this calendar year?
Yeah, as you know, we see ourselves as an AI infrastructure company, and the AI computing infrastructure includes CPUs, GPUs, and we invented NVLink to scale up the one computing node into a giant computing rack. We invented the idea of a rack scale computer. We don't ship nodes of computers, we ship racks of computers. And that NVLink switch scale up system is then scaled out using Spectrum-X and InfiniBand. We support both. And then further, we also scale across data centers using Spectrum-X scale across. And so the way we think about networking is really an extension. We offer everything openly so that people could decide to mix and match in different scale and however they would like to integrate it into their bespoke data center. But in the final analysis, it's all one big part of our platform. And the invention of NVLink really turbocharged our networking business. Every rack comes with 9 nodes of switches, and each one of them has 2 chips in it, and in the future they'll have more. And so the amount of switching that we do per rack is really quite incredible. We're also now the largest networking company in the world, and if you look at Ethernet, we came into the Ethernet market about a couple of years ago into Ethernet switching, and I think that we're probably the largest Ethernet networking company in the world today, and surely will be soon. And so Spectrum-X Ethernet has been a home run for us. But we're open to however people want to do networking. Some people just really love the low latency and the scale-up capability of InfiniBand, and we will continue to support that, of course. And some people love to integrate their networking across their data center based on Ethernet. And we created an Ethernet capability that extends Ethernet with artificial intelligence way of processing in the data center, and we're incredibly good at that. And our Spectrum-X performance really shows it. The difference of when you built a $10 billion or $20 billion AI factory, the difference of 10%, and it could be easily 20% on the effectiveness and the utilization of your network for your data center, that translates to real money. And so NVIDIA's networking business is really, really growing fast. And it's, I think it's just because we built the AI infrastructure so effectively, and the AI infrastructure business is growing incredibly fast.
Your next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. I guess with CPX for large context windows and Grok likely adding a decode specific solution, curious how we should think about your future roadmap. Should we be thinking about customized silicon either by workload or customer as an increasing focus by NVIDIA, particularly helped by your move to a dialect architecture? Thanks so much.
Everybody should want to push out dialect as long as they can. And the reason for that is because every time you cross a dialect, you have to cross an interface. Every time you cross an interface, you add latency, you add power unnecessarily. We're not allergic to dialect. We use dialects already, but we try to use dialects only when we absolutely have no choice but to do so. And so if you look at the Grace Blackwell architecture and the Rubin architecture, we use 2 giant reticle limited dies and we abut them. And that reduces the amount of architecture crossing. The dialect tax shows up in the architecture effectiveness of the competitors. If you look at NVIDIA, people call it our software advantage. But where software starts and architecture starts and ends is kind of hard to tell. It's, our software is effective because our architecture is so good. And so the CUDA architecture is unquestionably more effective, more efficient, delivers more performance per flop, per watt than any computing architecture out there. And it's because of the way we architect. With respect to how we think about Grok and the low latency decoder, I've got some great ideas that I'd like to share with you at GTC. But the simple idea is that our infrastructure is incredibly versatile because of CUDA, and we're going to continue to do that. All of our GPUs are architecturally compatible, which means that when I'm working on optimizing models today for Blackwell, all of that work and all of that dedication to optimizing software stacks and new models also benefit Hopper and also benefit Ampere. It's the reason why A100 continues to feel fresh and continues to stay performant years after we've deployed it into the world. Architecture compatibility allows us to do that. It allows us to invest enormously in software engineering and optimization, knowing that our entire install base in the cloud, on-prem, everywhere, from generations of architectures of GPUs will all benefit. And so we'll continue to do that, and allows us to extend the useful life, allows us to have innovation, flexibility, and velocity, which translates to performance, and very importantly, performance per dollar and performance per watt for our customers. And so what we'll do with Grok is you'll come to see GTC, but what we'll do is we'll extend our architecture with Grok as an accelerator in very much the ways that we extended NVIDIA's architecture with Mellanox.
The next question comes from Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my questions. Colette, I wanted to dig a little bit into the call for sequential growth through the year. So, I mean, you grew this quarter more than $10 billion sequentially in data center, and the guide seems to imply, the bulk of the increased $10 billion sequential in data center. So, how do you see that as we go through the year, especially as Rubin ramps into the back half? Blackwell's been a pretty massive acceleration for sequential growth. Should we expect something similar as we get to Rubin? And then I was also just hoping you could comment on your expectations for gaming. I understand the memory issues and everything else. Do you think gaming can still grow year over year in fiscal 27, or will that be under more pressure given memory? So those two questions, please. Thank you.
Thanks, Stacy. Let me start with the revenue going forward. Again, we're trying to look at revenue quarter by quarter. As you think about the full year, we are absolutely going to be still selling and providing Blackwell, probably at the same time that we're also seeing Vera Rubin come to market. This is a very great architecture that helps them just today, quickly standing up, and have already planned on many different orders across the different customers to provide that. It's too early yet to determine how much in terms of that Vera Rubin, that beginning ramp will start in the second half, and we'll get through it. But no confusion in terms of the strong demand and the interest. We do expect pretty much every single customer to be purchasing Vera Rubin. The question is, how soon are we in market, and how soon are they able to stand that up in terms of in their data centers? That was your first part. The second part was focusing on our gaming. As much as we would love to have more supply, we do believe for a couple quarters, it is going to be very tight. If things improve by the end of the year, there is an opportunity to think about what that is from a year-over-year growth. But it's still too early for us to know at this time, and we'll get back to you as soon as we can.
Your next question comes from Atif Malik with Citi. Your line is open.
Thank you for taking my question. Jensen, I'm curious if you can touch on the importance of CUDA, as now more of the investment dollars in AI are coming from inference workloads.
Still the most performant inference stack in the world. Optimizing it for NVLink requires us to discover and invent new parallelization algorithms that sits on top of CUDA to distribute the workload and the inferencing to take advantage of the aggregate bandwidth across NVLink 72. NVLink 72 has enabled us to deliver generationally 50 times more performance per watt. It's just an incredible leap, and it's sensible. NVLink 72 is a great invention. It was hard to do. The creation of the switching technology, disaggregating the switches, building the system racks, all of that, we did it all in plain sight, and everybody knew how hard it was for us to do. And but the results are incredible. So performance per watt is 50 times, performance per dollar 35 times, and so the leap in inference is incredible. It's very important. It's really important to realize that inference equals revenues now for our customers, because agents are generating so many tokens, and the results are so effective. When the agents are coding, it's off generating thousands, tens of thousands, hundreds of thousands, because they're running for minutes to hours. And so these systems, these agentic systems, are spawning off different agents working as a team. The number of tokens that are being generated is really, really gone exponential. And so we need to inference at a much higher speed. And when you're inferencing at a much higher speed, and each one of those tokens are dollarized, it directly translates into revenues. And so inference performance equals revenues for our customers. For the data centers, inference tokens per watt translates directly to the revenues of the CSPs. And the reason for that is because everybody is power limited. And so, no matter how many data centers you have, each data center, 100 megawatts or 1 gigawatt has power limits. So the architecture that has the best performance per watt translate.
You need the lowest total cost of ownership, is what he was going to say.
Watt, which translates in a gigawatt directly to revenues. And so you could see that every CSP understands this now. Every hyperscaler understands this, that Capex translates to compute. Compute with the right architecture translates to maximizing revenues, and compute equals revenues. Without investing capacity today, without investing in compute, there cannot be revenue growth. And that I think everybody understands. Compute equals revenues. Choosing the right architecture is incredibly important. It's more than strategic now. It directly affects their earnings. And choosing the right architecture, the one with the best performance per watt, is literally everything.
Your next question comes from Ben Reitzes with Melius Research. Your line is open.
Yeah, hey, thanks. First, let me say kudos on including the stock comp in non-GAAP. I think that's a great move, but that isn't my question. My question's around gross margins and the sustainability of the mid-70s long term. Should we read into the visibility on supply being available into calendar 27 that it's sustainable until then? And then, Jensen, what about after that? Are there innovations in memory consumption you can unveil that makes us feel better about the ability to keep margins at that level for a long time? Thanks.
The single most important lever of our gross margins is actually delivering generational leaps to our customers. That is the single most important thing. If we could deliver generationally performance per watt that exceeds dramatically what Moore's Law can do, if we can deliver performance per dollar dramatically more than the cost of our systems, than the price of our systems, then we can continue to sustain our gross margins. That's the simple, most important concept. The reason why we're moving so fast is because, number one, the demand for tokens in the world as a result of the inflection points that we've gone through has gone completely exponential. I think we're all seeing that, to the point where even our 6-year-old GPUs in the cloud are completely consumed and the pricing is going up. And so we know that the amount of computation necessary, the amount of compute necessary for the modern way of doing software is growing exponentially. And so our strategy is to deliver an entire AI infrastructure every single year. This year, we introduced 6 new chips. Rubin next generation will do many new chips as well. And every single generation, we are committed to deliver many X factors of performance per watt and performance per dollar. And that pace and our ability to do extreme co-design allows us to deliver that value and that benefit to the customers. And that is the single most vital thing as it relates to our value delivered.
Your next question comes from Antoine Chkaiban with New Street Research. Your line is open.
Hi, thanks a lot for taking my question. I'd like to ask about space data centers, which some of your customers are considering. How feasible do you think that is, and on what kind of horizon? And what do the economics look like today, and how do you think that could evolve over time? Thank you.
Well, the economics are poor today, but it's going to improve over time. As you know, the way that space works is radically different than how it works down here. There's an abundance of energy, but solar panels are large, but there's plenty of space in space. The heat dissipation, it's cold in space. However, there's no airflow, and so the only way to dissipate heat is through conduction. And the radiators that you need to create are fairly large. Liquid cooling is obviously out of the question because it's heavy and freezes, and so the methods that we use here on Earth are a little different than the way we would do it in space. But there are many different computing problems that really wants to be done in space. And so Nvidia is already the world's first GPU in space, Hopper's in space. And one of the best use cases of GPUs in space is imaging, to be able to image at extremely high resolutions using of course optics and artificial intelligence, and to be able to do that computation of reprojection of different angles, and be able to up-res and do noise reduction, and just be able to image at very high resolutions, extremely large scales, and very, very fast. It's hard to do that by sending petabytes and petabytes of imaging data back here on Earth and doing that work. It's easier just to do it out in space, and then ignore all of the data collected and processed until you see something interesting. And so artificial intelligence in space will have very good, very interesting applications.
Your next question comes from Mark Lipacis with Evercore ISI. Your line is open.
Hi, thanks for taking my question. I want to pick up with the comment you made on the script about revenue diversification. I believe, Colette, you said that hyperscalers were over 50% of revenues, but growth was led by the rest of your data center customers. And as a clarification, I just want to make sure I understood that. Does that imply your non-hyperscale customers grew faster? And if so, can you help us understand what are the non-hyperscalers doing different? Are they doing different things than the hyperscalers, or the same things on a different scale? And do you expect this trend to continue? Would you expect your customer base to evolve to a point where non-hyperscalers become a bigger part of your the larger part of your business? Thank you.
Yes, let's see if we can help on this question. So when you think about our top 5, as we articulated as being our CSPs, our hyperscalers, And they have right now sat at about 50% of our total revenue. There's a big organization, therefore, of diversity of all different other types of companies that we are working with. That it goes through our AI model makers, that goes through our enterprises, that goes to supercomputing, it goes to our sovereigns. There's a lot of other different facts on there. But you are correct. It's a very fast-growing area as well. We have a strong position in terms of all of our different cloud providers on our platform. And now we also have an extreme diversity of different customers that we are seeing all the way across the world. And this will really benefit seeing that diversity and being able to serve all of those parts. I'm going to see if Jensen wants to add a bit more.
This is one of the advantages that we have with our ecosystem, all built on top of CUDA. We're the only accelerated computing platform that is in every cloud, that's available through every single computer maker, available at the edge. And we're now cultivating telecommunications. Obviously, the future radios will all be AI-driven radios, and the future wireless network will also be a computing platform. That is a foregone conclusion, but somebody has to go and invent the technologies to make that possible. And we created a platform called Ariel to go do that. We're out in just about every single robot, every single self-driving car. Our ability, CUDA's ability, to have the benefit of the performance of specialized processors, on the one hand, with the tensor cores inside our GPUs. On the other hand, the flexibility of CUDA allows us to solve language problems, computer vision problems, robotics problems, to biology problems, physics problems, and just about all kinds of AI and all kinds of computation algorithms. And so the diversity of our customer base is one of the greatest strengths that we have. The second thing, of course, is without our own ecosystem, even if our processor was programmable, if we didn't cultivate our ecosystem, and talking about some of the things that we're doing today, investing in our future ecosystem and continue to enhance our ecosystem. Without our ecosystem, it's hard for us to grow beyond what design wins we capture for somebody else's ecosystem. And so we could grow and expand our ecosystem very naturally because of our the platform that we created. And then lastly, one of the things that's really important is the partnerships that we have with OpenAI and Anthropic, with xAI, with Meta, now makes, and of course, just about every single open source in the world. There's 1.5 million AI models on Hugging Face. All of it runs on NVIDIA CUDA. And so an open source in totality probably represents the largest, it's the second largest model in the world. OpenAI is the largest. Second largest, probably all the collection of all the open sources. And so NVIDIA's ability to run all of that makes our platform super fungible, super easy to use, and really safe to invest into. And so that creates the diversity of customers and the diversity of the platforms, and available in every single country, and because we support the whole world's ecosystem.
Your next question comes from Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I guess, sticking with the idea of the platform and extreme co-design, some of the news over this last quarter has obviously been NVIDIA's ability or push to bring Vera CPUs to market on a standalone solution basis. So I guess, Jensen, I'm curious of what's the importance that Vera plays in this architecture evolution as we move forward? Is this being driven more by the proliferation or the heterogeneity of inference workloads? I'm just curious of how you see that evolving for NVIDIA, particularly on a standalone CPU basis. Thank you.
Yeah, thanks. And I'll tell you some more about it at GTC. But at the highest level, we made fundamentally different architecture decisions about our CPUs compared to the rest of the world's CPUs. It's the only data center CPU that supports LPDDR5. It is designed to be focused on very high data processing capabilities. And the reason for that is because most of the computing problems that we're interested in are data driven, artificial intelligence being one. And the single threaded performance in this ratio with bandwidth is just off the charts. And we made those architectural decisions because in the entire phase, the different phases of AI, from data processing, before you even do training, you have to do data processing. So you have data processing, pre-training, and in post-training now, the AIs are learning how to use tools. And the usage of tools, many of those tools run in CPU only environments, or they run in CPU with GPU accelerated environments. And Vera was designed to be an excellent CPU for post-training. And so some of the use cases in the entire pipeline of artificial intelligence includes using a lot of CPUs. You know, we love CPUs as well as GPUs. And when you accelerate the algorithms to the limit as we have, Amdahl's law would suggest that you need really, really fast single-threaded CPUs. And that's the reason why we built Grace to be extraordinarily great at single-threaded performance, and Vera is off the charts better than that.
Your next question comes from Tim Arcuri with UBS. Your line is open.
Thanks a lot. Colette, I was wondering if you can talk about the deployment of capital. I know that you really jacked up the purchase commits, but it sounds like maybe you're over the hump on this, and you're going to probably generate about $100 billion in cash this year. So, and you know, pretty much no matter how good the results have been, the stock hasn't really gone up much. So I would think it's that you probably feel like this is a pretty good price to be, you know, buying back a bunch of it here. So I was wondering if you can talk about that, like, you know, question being, why not put a big stake in the ground and just, you know, have a huge share repo here? Thanks.
So thanks for the question. We look at our capital return very, very carefully, and we do believe that one of the most important things that we can do is really supporting the extreme ecosystem that's in front of us, that stems from everywhere, from our suppliers and the work that we need to do to assure that we can have the supply that's needed and help them from a capacity, all the way that we are in terms of the early developers of the AI solutions that will be on our platform. So we will continue to make this a very important part of our process and strategic investments. But of course, we are still repurchasing our stock. We are still with our dividend as well. And we will continue to find the right unique opportunities within the year for doing those different purchases.
Your final question comes from Jim Schneider with Goldman Sachs. Your line is open.
Thank you for taking my question. Jensen, you've previously outlined the potential to get to 3 to 4 trillion of data center capex by 2030, which implies a potential acceleration in growth rates, which you've sort of guided to this, at least this next quarter. The question is, what are some of the key application areas that you believe are most likely to drive that inflection? Is that physical AI, agentic, or something else? And do you still feel good about that $3 to $4 trillion envelope? Thank you.
Yeah, let's back that up and just reason through it from a few different ways. So the first way is on first principles, the way that software is done in the future using AI is token driven. And I think everybody talks about tokenomics and talks about data centers generating tokens, and inference is about generating tokens. And we generate tokens. You know, we were just talking about tokens, how NVIDIA's NVLink 72 enabled us to generate tokens at 50 times better performance per unit energy than the previous generation. And so token generation is at the center of almost everything that relates to software in the future and relates to computing. If you look at look at the way we use computing in the past, however, the amount of computation demand for software in the past is a tiny fraction of what is necessary in the future. And AI is here. AI is not going to go back. AI is only going to only get better from here. And so if you think about it, and you said, okay, well, the world was investing about $300 to $400 billion a year in classical computing, and now AI is here, and the amount of computation necessary is 1,000 times higher than the way we used to do computing. The computing demand is just a lot higher. And so if we continue to believe there's value in it, and we'll talk about that in a second, then the world will invest to produce that token. And so the amount of token generation capability that the world needs is a lot more than $700 billion. And I'm fairly confident that we're going to continue to generate tokens. We're going to continue to invest in compute capacity from this point out. And fundamentally, because every single company depends on software, every software will depend on AI. And so every company will produce tokens. And that's the reason why I call them AI factories. And whether you're a company in the cloud data centers, you have AI factories to generate tokens for your revenues. If you're an enterprise software company, you're going to generate tokens for the agentic systems that are on top of your tools. If you are a robotics factory, and self-driving cars, first indication of that, you have huge supercomputers, which are basically AI factories, to generate tokens that goes into your cars, that becomes its AI. And then you also have to put computers inside the cars to continuously generate tokens. And so we're fairly sure now that this is the future of computing. Now, why is it so certain that this is the future of computing? And the reason for that is because the way we used to do software was pre-recorded. Everything was captured a priori. We pre-compile the software, we pre-write the content, we pre-record the videos. But now everything is generative in real time. And when it's generated in real time, it can take into context of the person, the situation, the query, and the intentions could all be taken into consideration to generate the outcome of this new software we call AI, agentic AI. And so the amount of computation necessary is far, far greater than pre-recorded. You know, just as a computer has a lot more computation capability than a DVD recorder, a DVD player that was pre-recorded, artificial intelligence needs a lot more computing capability than the way we used to do software in the past. Now, the question about computation, about sustainability at the first level is just at the computer science level. This is the way computing is going to be done. Now, from an industrial level, because all of our companies in the final analysis are powered by software, and the cloud companies are powered by software, and if the new software requires tokens to be generated, and the tokens are monetized, then it stands to reason that their data center build-out directly drives their revenues. And so compute drives revenues. And I think they all understand that. I think people are increasingly starting to understand that as well. And then lastly, the benefits that AI produces for the world ultimately has to generate revenues. And we're seeing right in front, right being developed as we see, as we stand here, agentic AI has turned an inflection point. And it literally happened in the last couple of 2-3 months. Of course, inside the industry, we've been seeing it for a while, probably 6 months or so. But the world is now awakened to the agentic AI inflection. The agents are super smart. They're solving real problems. Coding is obviously supported by agentic systems now. And all of our coders here at Nvidia are using agentic systems, either Cloud Code or OpenAI Codex, enormously to, and oftentimes both, and Cursor, oftentimes all three, depends on the use case. But they have agents and design partners, engineering partners to help them solve problems. And you could see their revenue skyrocketing. These companies, in the case of Anthropic, I think their revenues 10x in a year. And they are severely capacity constrained because demand is just incredible. And the token demand is incredible. The token generation rate is growing exponentially. And the same thing with, of course, OpenAI. Their demand is incredible. And so the more compute that they can bring online, the faster their revenues will grow. And that goes back to the comment that I was saying, that inference is revenues, that compute equals revenues now in this new world. And in a lot of ways, that's the reason why we say it's a new industrial revolution. There are new factories, new infrastructure being built, and this new way of doing computing is not going to go back. And so, to the extent that we believe that producing tokens is going to be the future of computing, which I believe, and I think largely the industry believes, then we're going to be building out this capacity from this point forward and continue to expand from here. Now, the thing that is the wave that we're seeing now is the agentic AI inflection, and the next inflection beyond that is physical AI, where we take AI and these agentic systems into the physical applications, such as manufacturing, such as robotics. And so that's a giant opportunity ahead. Okay.
This concludes the question and answer session.
Okay. That is the earnings call for Nvidia. First of all, real quick, guys, there's obviously an issue going on across all of our YouTube chats. For some reason, YouTube will not let you send a regular comment, not even from myself. They're only letting emojis go through. So for the people, unfortunately, that really couldn't put their comment or see their comments, yeah, it's across all of our streams today. I think I saw some complaints on Twitter as well. So YouTube is having some issues. Nonetheless, that was the call. Tanner, I'll start with you. What was your reaction to what Jensen had to say?
The stock is not sharing my sentiment. I think the most impactful thing that he said, even though it's not like we didn't learn this from Jensen, but I think he's going to open up the world to this understanding, is that we are having a chat GPT moment for AI agents, and that there has been a true inflection point. Google, Perplexity, Notion, every single business and every enterprise is going to be pushing out these essentially AI-based natural language models that will be able to action on their own. Know what you want to do and do them potentially daily, potentially every time that some sort of signal ends up getting pushed through. But this is just going to drive the amount of queries, not even 100x, but it's just going to go into complete overdrive. Like this will be 100,000x, 1 millionx the amount of actual tokens needed, and somewhere in between the cost of tokens falling, but the total amount of tokens that are exploding, we will find the real growth for Nvidia, and that's actually accelerating to 70 plus, maybe 80 plus percentages even into next quarter. I was just doing some looking through on different companies. This is the second biggest company for free cash flow now, behind Apple. And if I'm not mistaken, the second largest for net income for the year as well, behind Alphabet. Could be wrong on that one, but the free cash flow one I definitely did check, and we're only behind Apple on that.
Yeah, I mean, I thought the call was pretty incredible. And to your point, this agentic ChatGPT moment is real. The biggest question was the first question, which was, will the hyperscalers continue to pay you? And Jensen kind of logically laid out the syllogism, which is that if tokens are key to revenue growth and compute is needed for token generation, then he explicitly said he is confident in the cash flows of the hyperscalers growing, which is what they're using their operating cash flows to put into Capex, so that they can essentially keep paying Nvidia. So everyone will continue to speculate if the cash flows or if the hyperscalers will, either stop the build out or increase the build out. But if the cash flows keep increasing, because of token generation, which is important for revenue. And to get tokens, you need compute. Then it seems like the CapEx cycle is not slowing down. Jose, what was your reaction to that broader question that Jensen spent time on?
Yeah, I like that question. And he kind of explained that for Nvidia to be able to continue to sell these types of chips, and not chips anymore, just these whole systems, they need to continue to innovate. So Jensen knows the moment pushes his team to continue to see those multi-X boosts from the prior generation. I mean, they talked about it from like Copper to Blackwell. It was originally supposed to be like 30X efficiency, ended up being 50X. That's why you want to buy Blackwell, because now you can make, in theory, 50X more revenue on this system. So Jensen knows for him to continue to be able to do this, the next generation has to be X times better. And to me, that sucks for competitors, right? It sucks for competitors because Nvidia doesn't care about what you're doing. Nvidia just cares that my biggest competition is the chip I released last year. I have to make this better, and I think that creates it creates probably a very aggressive work environment. But just like in anything, competition comes for everybody. Geniuses are competitive. They want to make sure they want to be at the best place, producing the best chips, because they can say, look, I helped design that chip. That's the chip I helped design. And I think that's going to keep the talent at Nvidia, and it's going to keep that overall generation. And then, like we saw, he was confident Capex was going to make revenue for those players. And that's why, for me, I'm very, very excited for not just Nvidia, but like a lot of the Max 7s that are being punished for this Capex. It makes no sense. They're going to be making tons of revenue from these AI infrastructure. And I don't know. I'm excited for the AI market still. Very, very excited. I'm happy that was the first question asked.
To go really quick back to one thing that he said was that energy might really truly be the real bottleneck. And this actually goes to strengthen Nvidia and their new chip models, because even if their competitors are selling their chips for free, obviously, you have the shell cost and the land and everything like this. But if you only have so much energy, you need to maximize your token output. And so you need the chips that have the best token generation, and you can pay a premium for that, because over the actual course of what's the X difference of the amount of tokens that I have, there's nothing even coming second place right now. So that's why you're seeing them win and continue to win even market share. If they're growing at anything over the 70% CapEx spend that you're seeing across, the big four, that's market share gains. So it's just incredible that this dynamic that there is a different bottleneck is not actually hurting Nvidia. It's just going to greatly put more pressure on, you have to buy the best because they have the lowest total cost of ownership.
Yeah, because of that constraint, right? You can only be an A+ student. You can't just be a C+ student with that passes. And the customers, like all these other players, are going to say, I only have X gigawatts. Am I going to spend it? Obviously, I can pay cheaper for this one, but the long-term revenue doesn't make sense. So it creates that market where you have to be the A++ student, and Nvidia is definitely delivering on that.
They're there.
Sam, your overall thoughts?
So I can't help remembering that you used the word syllogism a few minutes ago. That's just been running through my head. In fact, I had to ChatGPT that thing because I had no idea what that word meant until you mentioned it. But it does make sense. The beneficiary of all this is going to be Nvidia, no matter what. But I think the greater beneficiaries, as far as like a lot of upside, are going to be the companies that are involved in the data center build out, and also energy companies. But they're going to be constrained. But overall, like $4 trillion by 2030 is pretty insane, because I do remember a couple of years back, it was $1 to $2 trillion in terms of data center CapEx, and that's doubled in just less than 3 years. Because we're talking about trillions, we're not talking about billions anymore. And the CFO also mentioned that they're seeing hyperscaler CapEx at around $700 billion or approaching $700 billion for 2026. We got an estimate of $620 billion for 2026, which means that they are all undershooting their guidance for CapEx in 2026. So we already see that acceleration continue for that. It's just anything that touches data center is going to just pick up steam at this point, if that truly is $3 to $4 trillion by 2030. And that would also include a lot of these data center stocks like Nebius and Iron and so on, if that were the case. But also other companies that have been ripping this year, other than just the data center ones. Vertiv Holdings is one a lot of people know about, but there's also Comfort System Fix, which builds air conditioners. Used to build air conditioners for schools and homes, and now they've progressed in the data center, and that's like overcoming all the revenue, and they are tremendously growing. There's also a lot of other players in this entire field which have benefited all this and basically given us light that, look, this is going to be a lot more than we actually expect. The fact that we are going to these other vendors who aren't even in the business of building data centers or contributing data center infrastructure, that we need to turn to them because that is how much we are constrained in this. And it's going to spread throughout. And just seeing how much spend there is and all the demand is being sworn up by, he kept on saying OpenClaw, which is now OpenAI since they acquired them, in addition to Anthropic with Claudebot and everything. Like, look, this is pretty insane. And now it's actually starting to make sense to me why a lot of software companies are being sold off, because you've had that ChatGPT moment, as Jensen Wong said, of agentic AI. So any software company that isn't implementing agentic AI into their application layer is going to be left behind. And didn't think this was going to happen for a while, because it starts to make me even think like, look, if the goal was to get AGI or artificial general intelligence, what if we already are there? And if that's the case, well, we have a lot of work to do over here, and you're going to start weeding out the losers very quickly, a lot sooner than we expect. Because I thought AGI was going to be like at least 2030. But now,
I don't even understand what you're saying. Are you saying that we're at AGI today? Like, you mean today?
Yeah, according to Jensen Wong, we had the ChatGPT moment of agentic AI, right? But if you think about it from this perspective, from what I think AGI is the capability of AI to implement tasks on its own, right? So it sounds like we're pretty much already there. The fact that you have to ask the bot, or you have to ask Anthropic or Claude to do something for you, and it's integrating all these capabilities, integrations with all of your applications using your authentication. What if we're already there? Because if it's just a matter of asking it to do something, what if it knows what you want based on what you already asked in your history? So it just does that for you, right? That is AGI in itself. The fact the computer can think for itself.
And that would imply a lot more compute, is your point.
Yeah, I definitely don't think we're there yet. I don't even think we're remotely there. I also think a part of AGI is that artificial general intelligence is that they're smarter than us at every turn. Like they, the sort of country of geniuses in a data center, Dario comment, that I asked Google the other day what base 44 was, and it didn't give me a correct answer. It didn't know that it existed. Like, we're still far away from AGI. I wouldn't say that.
But to Sam's point, the idea of AI doing stuff for you, which is this ChatGPT of agentic workflows, if that's beginning, then that's why we can keep believing compute's going up. It's that simple, right?
Yeah, no,
even if we're not at AGI yet right now.
Yeah.
I mean, at this point, I feel like we wouldn't know we achieved AGI until it's already there, right? So what if it's already been born and it's just growing, getting smarter from a metaphor standpoint? Like, look, I didn't think when I heard the hot term agentic AI a year ago or a year or two ago, I didn't think we'd be at this level already. It just it was actually something that I constructed in my head what it would be, and we've gotten a lot further in it than I thought we would be today, and that fear is escalating around the street. Now, all these software companies are not like, you already have ServiceNow, which already is implementing agentic AI on this platform, but it's like it's becoming an unstoppable force here, and all the money and investment in the stock market is literally going toward anything to do with data center. Like there's, if money was just liquidating out of the market would go down, but it hasn't. It's just narrowed its leadership. And a lot of that leadership that's pushing the market up are the mega caps or the companies that have to do with data center build. Like StockTech says, there's not enough market cap in like these defensive companies, utilities, and so on to be able to bring the stock market up. It has to be someone in semiconductors. And I posted today, like, look, the top 10 companies in the entire world, TSM is already $2 trillion. Broadcom is $1.5 trillion. And Nvidia is nearing $5 trillion. That's $8.5 trillion of market cap that has not even been there 4 years ago, right? So 4 years ago, like we weren't even close to that. It was all like hyperscalers, mega caps, Berkshire Hathaway, Tesla, all these other companies. Now it's like all semiconductors, and they're all growing. Like SOX is at an all-time high, right? So it seems like that's where the capex is shifting toward, $3 to $4 trillion, and it's becoming very clear that that is where the investment is getting put toward from a public investing perspective.
I also love, and no one made me realize, this is off topic a little bit to what you were saying, Sam, but no one made me realize this more than Jose, but the comment about, are you going to be aggressively buying back your stock because the stock hasn't moved? They specifically answered that they would prefer to invest in the ecosystem.
Yeah.
And this is extremely important. Just like what Jose talked about with the CoreWeave deal back in the day, they actually want smaller companies to be able to get access to these data centers, because how are you going to get more sales for Nvidia? It's not just, increasing EPS is not just buying your own stock. What you need is more OpenAI and Anthropic competition. If OpenAI just owned this entire market, we wouldn't even be seeing rollouts like we're seeing today, because they can almost hold it back. They can let the rollouts come in. They have all the customers, but now because there's a race, they're, what do they call it? Like threat level red, right? They're in deep red right now, all of them. So they're rushing to throw out new products, and it's actually increasing the amount of compute that people are purchasing. But maybe the Frontier AI Labs will include names that are not even included today. I think a bunch of people have already concluded that, there's 3 or 4 names, but that doesn't need to be the case. Just like how we see many new companies appear today in traditional business. Like there can always be new entrants. Now, go ahead.
Go ahead, Tanner. Sorry, go ahead.
No, I was just going to say the same thing could be said about Nvidia's business in terms of new companies coming in to try to replace Nvidia, but it's much, much harder because they're actually very much in the hardware game. They have literally, you could name a country and they have a supplier from them. So the relationships, the suppliers, the customers that they have all around the world, nation states that are purchasing from them, it's actually much harder to replace Nvidia than it is the software names. You can build brand new software names from companies' garages, and that can get started up like almost like Perplexity did, right? Came out of nowhere.
And I was going to say, for the frontier AI models, right? I mean, there's still so many different types of models that we haven't hit. Like, what happens when we get like some crazy frontier AI model for medicine? Like, that's going to be crazy. It's like frontier AI model for robotics. Who's the real winner there? We have some open source frontier AI model for, we're talking about space, for space solutions, and for all these different types of thematic pushes. It's not just going to be OpenAI and all these players can't be the frontier models. I mean, probably they can, but I don't think they will for all these types of different opportunities. And with agentic AI, I actually want to take the opposite take on it. I thought all last year, everybody was talking about agentic AI. Nvidia was talking about it. Meta was talking about it. Everybody was talking about it. And at the end of the year, we still hadn't seen it. And I'm like, when is this going to happen? Because everybody was saying by the end of 2025. Codex came out 5.3, Claudebot and Claude also. Those are shifting, and I think one thing Jensen did, he threw a little bit of a nice softball for the AI lab players. He mentions that thanks to these agentic AI solutions being very productive, the tokenomics for them is a money-making business for them. So many people think the AI labs are losing money. The reason AI labs are losing money is because they invest more in compute. But if they said, you know what, let's stop investing in compute and we just sell what we have right now, they would be making lots and lots of money. The margins on their APIs are I think 60, 70+%. Is extremely, extremely high. So many people think that these companies are burning cash. The reason they're burning cash is so they can build even more revenue. Exactly what Jensen was talking about, that revenue of Anthropic grew 10x in just 1 year and probably expected to go another 5, 6x next year.
Yeah, the tokens are already profitable.
Mm-hmm.
The tokens are already profitable. And that's why everyone's saying, where's the ROI? Where's the money coming from? It's like every business, every consumer that's wanting to, try to stay ahead. That's what happens. These are the new tools. This is the gold rush.
It was like if I'm a big real estate investment, right? I can have 2 houses be extremely profitable, or I can say, oh, look, this is extremely profitable. I'm going to take so much more debt because I see this going to the future. Let me buy more and more and more and more houses. Even though in the short term, it might look like my business is horrible. I know that each of these positions is giving me a nice cash flow for the long term.
What do you guys, we'll end it off right here. What do you guys think about the stock falling on this?
I think that give it a week, let the analyst reports roll in, and then we'll have. You know what I honestly feel? I'm curious if potentially Nvidia is getting so big that it's almost having like that Amazon. Do you know that Amazon problem that they had with employees, that almost everyone has worked for Amazon? So them hiring new people is getting hard because people don't want to go back to work for Amazon. I almost feel like investors feel like they've missed out on Nvidia, and now they're not willing to purchase it, even though it's undervalued.
Yeah.
Like,
I think that's fair. Yeah.
The funds and the institutions need to come in, because retail, I just honestly don't think is willing to pay this price for a company, even though it makes like from a valuation standpoint makes sense, but it's $4.85 trillion.
I agree. I think give it a couple days. I also think maybe the sell-off right here is and it's not red, it's just red from the highs, is maybe saying something about the macro, a little bit of AI exhaustion even after a phenomenal earnings. The good thing is, if you believe in the growth story and you have ample enough evidence based on what Jensen said, if this thing really does get hit, it's going to be one of the cheapest growth stocks on the planet that is actually putting up growth. So I think it'll normalize around the 190s. Could I see it below that? Sure. But I think in a couple days, the upgrades should be closer to 300 tomorrow across the board. Yeah, maybe this thing gets a breakout above 200. All right. I think that's pretty much it. Thank you all for being here. I'm sorry for the chat being so off today. It's not just my stream, it's everyone's stream on YouTube.
Yeah. YouTube killed this.
Yeah, it would have been nice to see everyone's reaction. All I get is these weird emojis, and hopefully it's fixed tomorrow and we don't have to deal with it again. But that's what we got. Nvidia earnings. Thank you all for being here. Everyone's Twitters and YouTubes in the descriptions in the chat. Again, we appreciate deeply. You guys could have done a lot of things for the past couple hours. Those that spent your time with us, even with the 10-minute delay for Nvidia earnings, we will remember this years from now. And hopefully Nvidia is a much larger company years from now, and the overall stock market is much larger as Nvidia is leading the momentum around this revolution that we are all alive to witness, which is really cool to be a part of.
You know, it's literally like 6 months, maybe 9 months away from them being the most cash flow generative and net income positive company in the entire world.
Yeah.
And that was they weren't even on the top 10 list 5 years ago.
It's incredible. It is incredible to witness. Thank you, everybody. Have a great day, and we will see you on the next one.
Bye, guys.